Online audible, Ada? Yes. Yesterday, what were we doing? We had started with basics of capital market. What are the instruments we had done? We saw DVR shares. What was DVR share? Differential voting rights. Whenever a share has different voting rights, whenever a share, say for example, has been exchanged with dividends, I may have one share is equal to one note in the normal scenario. If that is increased, say for example 4 share is equal to one note, or for example 2 share is equal to one note, or even 1 share is equal to one note, but you are treated somewhere differently from a normal shareholder, you are called as a equity shareholder. And next we saw was what people preference share. We saw right to dividend, when, how, what, and all those aspects. And then we saw debentures. And then we came to bonds. In that, the first thing we saw was FCCB. What is FCCB? Foreign currency convertible bond. What is foreign currency convertible bond? There will be an Indian company. An Indian company will issue a bond outside India. It will raise money in foreign currency. The repayment also will happen in foreign currency. Interest also will be paid in foreign currency. On the date of maturity, the bond holder will have an option to either convert it into the share of the company or for repayment of the money. Correct? Now, such type of bonds are called as foreign currency convertible bond. What is foreign currency exchangeable bond? Whenever an Indian company, it issues a bond, upon maturity, the bond holder will have an option. What? Either to exchange it with the share of the offered company. That is, there is another company. You will not get the equity share of the company who has issued the bond itself. You will get the equity share of a different company. Which company? They all belong to the same group. Now that company was called as an offered company. That's the difference between FCCB and FCEB. FCCB, there is one more point also, 25% can be used for general corporate restructuring purpose. The end use should be as per ECB guidelines. That is something which we had written in FCCB. And then what else we saw? We saw municipal bonds. Municipal bonds is nothing where the Bangalore Municipal Corporation had started. They were the first people to issue. It was not a great hit. It was a loss. They could not raise the actual money required. So because of that, SEBI also had come up with the guidelines in 2015 which said there are some minimum requirements that you need to satisfy to raise the municipal bonds. In short, they're also called as muni bonds. And what are the requirements? The promoter, the director, or the issuer should not be considered as a willful defaulter, and there should not be any default in repayment of principal, interest, any debt, and you should have not been prohibited from accessing the securities market. There will be that negative net worth point in our book, that you strike it off. Negative net worth is not there. When we wrote it, we did not write negative net worth. Correct? That point, strike it off. Come. Which one? TV. I have informed. It seems there is some wire connection. There is a problem. I've informed them. Probably give this 1 day time. It's flickering, it seems. Not sure. If you guys can accommodate front, come front. You'll come, come off. No, back is always comfortable there. I have informed them, probably by tomorrow it should be done. Yeah. Okay. And then what else we saw? Municipal bonds we saw, and securitized debt instruments. What is securitized debt instruments? Whenever there is a non-performing asset of any banks or lending financial institutions, which is always a very bad thing for a company. So what will they do? They will transfer that to another company. That company is called as SC or RC, securitization company, or restructuring companies, reconstruction companies. So we call them as SRC, securitization or asset reconstruction companies. What will they do? They will issue instruments and they will raise money. And they will buy this particular non-performing asset. They will recover the money. So the instrument issued by the securitization companies to raise money, that instrument is called as securitized debt instruments. Generally, me and you will not be there. It will be always the QIBs that will be involved. Agreed? That's where I think we had stopped. Yes? Okay. Next, which one will do? Options ಹೋಗೋಣ ಒಂದು 2 ನಿಮಿಷ ಆದ್ಮೇಲೆ ಹೋಗೋಣ. Derivatives also ಆಮೇಲೆ ಹೋಗೋಣ. Okay, easy one will do. Okay. The next one, people, is called as, we will do REIT and InViT. Easy ones. Okay, understand what you mean by REIT, people. Now, we have seen REITs. If you guys remember, have you seen REIT in company law? Illa. No. Okay. Now, do you all know what is mutual fund? Mutual funds you all have heard of. How does a mutual fund work in your language? How does it work?
Collecting money from investors.
Collecting money from investors. How do they work? Can you please tell me? Okay, let us imagine there is one person. Let us imagine there is one organization. It acts like a trust. We call them as vehicles. Yeah, investment vehicles we call them as. Okay, there will be a trust and there will be hundreds, thousands, lakhs of people who will give money to this trust. Agreed? Now, why am I giving money to this mutual fund? Why are we giving? What is mutual fund? You said they will raise money from lot of people. Okay, after raising, what will they do? They invest it in different companies. You can only invest, no? Why are you giving it to them? They have some fund managers. They know how to manage funds. Now, people, what are we doing? I do not know which company to invest. I might have some money. I don't know where to invest. I don't have that knowledge. I don't have that expertise. So, what will I do? I will give my money to these companies who will have a specialized person called as fund managers. You also call them as portfolio managers. They have experience and expertise in that field. Now, what will they do? They will invest the money they have collected from you in various places they are going to invest. Getting the point, huh? So, they have taken money from you. There are tens of hundreds people like you. They have taken money from us. And that money they are further investing into various companies. Now, such type of people, now if the trust is raising money from people like us, and if they are further investing that into companies, you call such trust as what? Mutual fund. Agreed? Sir, where are they investing? They are investing in where? They are investing in listed companies. Agreed? Yes, sir. Example I can give you is, let us take for example, they may invest in Bajaj Finance, they may invest in ITC, they may invest in Hyundai, they may invest in Zomato, Eternal, as the case may be. Agreed? Now, such type of companies we call it as mutual funds. Now, sir, there is a second type of company that is called, what will they do? Again, there is a trust. Now, again, they will raise money from people like us. Now, where are they further going to invest? Now, I'm going to explain something called as another terminology. That terminology is called as what, people? REIT. Now, what do we mean by REIT? REIT means, people, real estate investment trust. Real estate investment trust. Now, what is the significance of real estate investment trust? Now, try to think. Now, for example, it's always wise for you to diversify your portfolio. What do I mean by that? They always say, right, there is a saying, do not park all your eggs in one basket. If this basket falls, all the eggs are done. That's why you have to always do something called as diversification, meaning invest in more than one place. If I have 100 rupees, it's never wise for me to put the entire 100 in one stock. Rather buy two stocks. Agreed? Yes. Now, like that, what I feel, I should not only invest in, stock market. What if tomorrow something happens? Who will take care of uncertainty? Now, for example, Trump, something he blabbers there like an idiot, and our market here gets impacted. He does something there. It might be good, bad, as per what people say. The impact is on the stock exchange in India. Now, a person sitting somewhere not even in my country is controlling my portfolio. For example, 3 months back, I have been investing for what, 11 years. 3 months back, if someone had invested, I started investing 11 years back. Me and the person who starts investing 3 months back would be on the same ground. My 11 years of portfolio hike was taken for a downfall just by one person. Are you getting the point? Now imagine me investing everything in a stock exchange and hitting something like this. Now what do? I'll think, okay, let me diversify into something else. What do? Why not invest in real estate? Best no. All our ancestors have said one thing. What? Invest in land. Land will always appreciate. Pakka? Yes. Yesterday I was studying one report. That report said in Mumbai, in south of Mumbai, 1 square feet will cost you 1 lakh. Now what is this 1 square feet? 1 square feet is in which place we have put this TV now. The TV, it's sitting in one cube, no? That cube will cost you 1 lakh rupees in Mumbai now, in south of Mumbai. I'm telling you, what is the cost of real estate today? If you want to own an apartment in south of Mumbai, that will cost you around 8 to 10 crore. Same thing is also going on with Bangalore. In my childhood, Kormangla per square feet cost was around 250 rupees. The day when I was in school, 250 rupees. Today, first of all, there is no land. If it is there, I'm telling you, where it is going in 40 to 45,000 rupees per square feet. Can anyone afford? Now I'm telling you, people don't invest in stock market, invest in real estate, it will not fall. I'm giving you a very good advice. Now invest. How will we invest? Because that is the prices today. But what if I tell you, people, even if you have 1,000 rupees, you can still invest in real estate. Wouldn't you be interested? The same way, I'm telling you, you invest in land. I'm telling you, even 1,000 rupees you can invest in land. Wouldn't you be interested? Now, how can I invest that, sir? Using one instrument. That instrument is called as a REIT. What do you mean by a REIT? A REIT means, people, a real estate converted into an instrument form. Now, how does that happen? What will a mutual fund do? Mutual fund will take money from me and they will further invest into listed companies. That is what they did. Now, what will REITs do? Again, same concept. They will collect money from us, people like us, hundreds, thousands, lakhs of people like us. They will raise huge corpus, and that money they will further invest in real estate like land, office spaces, and commercial buildings, gated communities. They will further invest there. Now what is happening? Now of course I am not able to buy land. Now what will they do? They will first collect, say for example, 1 lakh crores from people like us. And they will divide it by number of units. Say for example, 1 crore divided by 10 lakh units. 1 unit will cost how much people? Probably say 10 rupees. So with 10 rupees, I can own 1 unit of REIT. So if that 1 crore is becoming 2 crore, my 10 rupees will become 20 rupees. So like that, you can take the advantage of real estate without actually buying real estate. Now, if something happens, something outside India or anything, any political, it will not have an impact on this as much as you have an impact on your stocks. Don't you think it's a wise and a beautiful instrument? Yes. Diversification starts. Now, sir, any examples for this? Yes. One is right in front of us here. Where, sir? In that signal, there is one mall. What is that mall called as? Nexus. Remember, Nexus is a REIT. How did Nexus get the money? Nexus has raised money from people like us. Nexus is listed on stock exchange. You guys can buy. Hopefully networks. This is the stock. Nexus Select Trust. And what is the price? 161 rupees today. Yeah. Now, if you check Nexus, their website, you will know what and all they have done. Everything. Your Vega City Mall is there, no? That is also Nexus only. Your PVR is there, no? Forum. What popularly is called as Forum. This is also Nexus only. Just for your information, one shop in the ground floor of Nexus Mall costs 15 to 20 lakhs for rent. For your information now. Nice, no? On a Saturday, Nexus sees a footfall of 20,000 members to 50,000 members, it seems. Yes? Now, are they earning money? Yes, they are earning money. Now, will you get return? Yes, you will get return. Are you getting the point? Now, what else they will do? They will buy some land or probably in some place where they see there is a good investment opportunity. They will buy it today. After 3 years, they will sell. So what will happen? The company's market capitalization, the company's funds, it keeps on increasing. So you started with 1 crore. That 1 crore will become 5 crore, 8 crore. That money goes to whom? It goes to you. This concept is called as REIT. Understood? Hello? Everyone? Yes? Hello? Nanan malagspadtira. You will make me sleep. Okay. Yes, sir. So mutual funds invest in listed companies. REITs invest in real estate. Sir, there is a next sort of instrument that is called as what people? InViT. What do you mean by InViT? InViT means people. Infrastructure Investment Trust. Again, all three people work on the same principle. There is a trust who raises money from people. And what will they do? They further invest it into a place. Where will they invest? If mutual fund is investing in a listed company, if REITs are investing in real estate, infrastructure investment trust, where will they invest? Infrastructure projects. Sir, what is this infrastructure project, sir? People, highway is an infrastructure project. Airport is an infrastructure project. How many of you know Bangalore wants to construct a second international airport? I hope you guys know. Why is that not happening? Why? You. Money. Why money? You have money. Why no land? After Hebbard, what else is there? It's a, when you can do it on left side, after that also it's a vacant land only, no? What a Kovilan?
Nothing.
Tilda? Tilda na Kovilan? Joke, lion joke, okay. Yes, sir. Now, why it's not happening? Because we have signed a agreement. What is that? We have signed an agreement with the KIA, Kempegowda International Airport, saying that in the vicinity of 45 kilometers to 60 kilometers, Bangalore will not construct a second airport for the next, there is a tenure, 55 to 60 years. We have signed a agreement. Because of that, we are not able to construct. Money, and 1 second you will get money. Of course. The second highest state in terms of GST collection. Quarterly collection is what? 1 lakh crore. What are they doing then? Can't they spend? Yes, they can spend. Yes, people, it's not like what we think, people. India has excess money, provided it has to be put in proper use. For example, I'll tell you now. In 2024-25, our national highways, you guys will pay toll, right? When you go in highways, you know what is a toll that the national highways authorities have collected in 24-25? A guess? Guess any number? 50,000 crores. Anna oda onde sari. In 24-25, the National Highways Authorities has collected 22,000 crores as toll. In 24-25. In 25-26, we have still 1 quarter left. Jan to March is still not yet done. We have already collected a toll of 82,000 crores as just to toll. Where is all this money? Irko. Yengeyo irko. You don't know, I don't know, they don't know. But we all know. Yes, money is there, crazy money is there, 80,000 crores. Now my question is, if not our local roads, at least our highway roads are good. Yes, sir. Agreed. It is part of people infrastructure bonds. Who raises money, sir? National Highways Authority of India. They have a trust. Now, if I am interested, I can invest there. Now, they will further invest into infrastructure projects with a fixed return given to me yearly, which will be definitely more than your FDs, RDs. Generally, it will be around 11% to 16% return. And what type of bonds are these? These are called as infrastructure bonds, or you can also search them as InViT, Infrastructure Investment Trust. The best example is, people, your National Highways Authority Trust. They only have it. Yes. Now, why was I doing a research? I was just seeing one day, I generally do this math. You know, the first fundamental thing I consider to invest is what is really going crazy in front of my eyes. I will invest that. Real estate. Every one of us know. Should someone come and tell it in your dream, hey, real estate is good, I invest. Now it's a risk you take. Yeah, like that. What else is good? Right in front of your eyes. Automobiles. Right in front of your eyes, it's going good. Microchips. Lace chips. Illa. Microchips. Yes, sir. And automobiles is going good. Yes, and any other sector that is going good according to you? Right in front of your eyes. Don't go too much over to laptop. In general, solar energy, green sector, electric vehicles, Ola Electric. Yes. Aether. Yes. Vada pav. Addo macha. Adda. Adda. Gobi manchuri. Gobi manchuri. Ali bhaji. Black bhaji. Black bhaji there. Ali black bhaji. Black bhaji. Match tintanalli. Yes or no? Now, people, these are some sectors right in front of your eyes. One day when I was going recently for Pondicherry, I was just seeing 1 minute. There are around 9 toll booths. 9. Hardly, I think one car takes 5 seconds. That too, if one person does not know how to scan properly there, may take 5 seconds. So, in 1 minute, how many? Sir, maths we don't want. Anything in law you tell us. 60 divided by 5, 12. 12 vehicles is a different number. For 12 vehicles in one booth, that is into 9. Take 10 only. 120 vehicles per minute. You take per day. 24/7 it works. Now my question was, is there any company that I can invest in this sector? Crazy money. Research is going on. Once I get to the proper company, I'll tell you. Yes, sir. But one InViT is this one. But which comes with a bond. Bond I will not invest because it is like your FD and RDs. I want capital appreciation. Meaning I put 10 rupees today, let that grow to 30, 40 because I'm taking risk. If I put 10 rupees, if I get back also 10 rupees with 3 rupees, 4 rupees interest, that is not something which I am inclined towards. Correct? Huh? Yes, sir. So these are certain things that is there in front of your eyes. Come out of your comfort zone. Start thinking in that zone. Do paper trade. Follow a company. Go through fundamentals. Start learning. That is how you guys will learn. Yes, that's how it works. There is one company called as Rifex, which is again related to energy sectors. Yeah, so this company has given me what? 800% return. 800%. That means what? 8 times it has multiplied. If I have invested 100 rupees, it has become 800 rupees. Imagine if I had invested some money. It's a good money. Then, so both will be there. Now solar is something and no one needs to tell you. Suzlon Energy is one of the company which is into energy. Sir, what sir, we don't know Suzlon. Hey, you all know da. Illa sir, we don't know. Macha, around 60% of the windmills, whichever you guys see in all your highways, will be owned by Suzlon. Windmills, no dilva. Then they manufacture it. Solar, Andhra Pradesh. Suzlon has set up solar panels. They are supplying electricity directly to the government. 600 acres of solar energy. Then, yes, hello. So, sir, the third type of trust, again instrument only. What is that called? Capital market will be practical as well as theoretical. Learn something. Tomorrow you should be able to think. Make that difference. Bandi, don't just sit to write something and go. Hello? Sappa. Hey, I am only feeling, you are also feeling that the class is not responding. I am not doing something properly, tell me. ಇದನ್ನು ಹೇಳಲ್ಲ ನಂಗೆ ತಲೆನೋವು ಬರೆಸ್ತಿರೋ ನೀವು ಅಲ್ವೇನೋ ಯಾರು ಮಾತಾಡಲ್ಲ ಅಲ್ವೇನೋ ಯಾಕೋ ನಾನು ಹಿಂದೆ ಮಾತಾಡ್ತಾರ ನಾನು ಇಲ್ದಿದ್ದ ಮಾತಾಡ್ತಾರ Okay, InViT, where will they invest people? They invest in infrastructures. Like highways and probably urban development, that is bridges, roads. Yeah. Sir, why are roads good in highways and why not in city? Roads, highways come under central. Internal comes under state. State corruption jasti. No one to question, no? Yes or no? First thing. Second thing. In highways, you are paying upfront at all. After paying also, if the roads are not nice, will you guys leave? Then, so you are paying for every ride you go on a highway. That's not the case here, right? But technically, if you see, for this also we have paid something in the form of road tax. Yeah, and you guys have no idea how much will be the road tax. If there is a vehicle, if you are purchasing, imagine if the cost of the vehicle is 20 lakhs, the road tax will come to around 3.5 lakhs to 4 lakhs. That is what you will pay to the government. And we get this beautiful roads. Correct, Noda Matthew? Okay, understood these three things, huh? Now that is what is people, something called as REIT. REIT has certain advantages, it seems. Again, there is nothing much to write here. See the advantages here. Now, what do you mean by REIT? REIT understood, huh? Hello. Now, see what is it? It is always less capital intensive. Why is it called less capital intensive? Now, with 10 rupees, can I buy land? No. But can I buy a unit of REIT? Maybe. With 200 rupees, you can buy REIT. No. That means what? You're investing in real estate with 200 rupees. Less capital intensive. Beautiful only, no? Hello. Suitable for small investors like me. Good. Third one, transparency. Agreed, ah? In real estate, you tell me, da, transparent irukka. When you want to buy the land, the grandfather's third wife's fourth son will come and say, even I have a right in this. Agreed or not? In REIT, avalla idya. You have any tension, but still you are getting the return, no? Don't you think the safest form of investment? Yes. Assured dividends. Agreed? Yes. The real estate is going up. You will get dividends. There are returns. Tax free. Dividends earned by investors of REIT will be tax free. This cannot be forever. Initially, to promote REITs, these tax free things and all are there, but this will not be there forever. This is only part of our bookish thing, but this will not be there forever. Yes, sir. Next one, fast capital appreciation. Agreed, With real estate, your money also will grow. Easy to buy. Open Demat account. Within 2 seconds, you can buy 1 unit of REIT. But how much time will it take for you to buy one piece of land? The time taken is more only, right? There are so much of due diligences you need to do. Nothing here. Yes? Hello? REITs are similar to mutual funds and shares. They provide income by way of dividends. You get return. Next one, capital appreciation. Today 167, this will go to whatever. I think when we first did it in their class, it was 120. When we did it in the previous class, it was around 120. Today it is 167. In the next class, when I do, this will become 220. Good only, no? 50-60 rupees is going up per unit. Imagine if I had invested some, even at least 5,000 rupees. Good, no? Yes? Yes. Infrastructure investment trust, what do they do? Considering the importance of infrastructure sector with an aim to provide a suitable platform for financing, refinancing infrastructure projects, government introduced a new investment vehicle named Infrastructure Investment Trust. The primary object of InViT is to promote the infrastructure sector of India by encouraging more individuals to invest in it. Typically, such tool is designed to pool money. Understood what you mean by pool? So some trust is there collecting money from lakhs of people, from several investors to be invested in income generating assets. The cash flows thus generated is distributed among investors as dividend income. InVIT is established as a trust and is registered with SEBI. Typically, infrastructure investment trust, SEBI comprises 4 elements, namely, what and all will InVIT have? InVIT will have 4 people, it seems. One is called as a trustee. What do you mean by a trustee? Trustee, sponsor. %, project manager. Okay, do one thing. They may ask you this. Okay, write down this InVIT. Infrastructure Investment Trust. Infrastructure Investment Trust. Online, audible, ada? It's a pooled investment vehicle. It's a pooled investment vehicle in which several investors invest money for dividends and capital appreciation. And capital appreciation. And capital appreciation. They primarily invest in infrastructure sector, they primarily invest in infrastructure sector, and it comprises of four elements. I'll be rating 4. The first person is called as trustee. They are registered as debenture trustee with SEBI. They need to invest at least 80% into infrastructure assets that generate steady revenue. The next person is called as the sponsor. It can be a body corporate. That is, of course, LLP, company. It includes an inducted sponsor. The third one is called investment manager. It supervises the operational activities operational activities. The last one is the project manager it is an authority for executing projects. It is an authority for executing projects. This is called as what, people? InViT. So InViT will have four main people they are telling you. One is called as a trustee, one is called as a sponsor, investment manager, project manager. What do you mean by a trustee? In a company, who will take care of a company? There are people called as board of directors. In a trust, similar people who will take care of assets of the company, they are called as what? Trustees. In a company, there will be board of directors. In a trust, we call them as trustees. They are the ones who will take care of the assets of the trust. So, can any random person become a trustee? Answer is no. With SEBI, you should be registered as a debenture trustee. So, SEBI gives you a recognition like a license. If SEBI recognizes you as a debenture trustee, only they can become the trustee of this InViT. Random people cannot become. Next one is that, sir, they need to invest at least 80% into. So I'm saying you're an infrastructure investment trust. At least 80% of the money you guys have collected, at least 80% of it has to get into infrastructure projects. That too, what kind of projects? Which will generate revenue for you. Like I told you, highway, it generates toll. Versus a normal road might not generate any money for you. So you need to invest your money into such projects which will give you a steady revenue. Such projects you need to invest. How much? 80% of the money you have sourced should get into such projects. Is this clear? Huh? Next one, sponsor. What do you mean by a sponsor? The person who initiates this trust, who starts this project, we call that person as a sponsor. That sponsor can be a body corporate, it can be an LLP, or it can be a company. For example, I told you the National Highway Trust is done by whom? The NHAI. It's a body corporate. National Highway Authority of India. They start this. They own this. Now they become the sponsor. So an LLP can become, a company can become, a body corporate can become. It also includes a inducted sponsor. Now what do I mean by the word inducted sponsor? Inducted sponsor means simple. The person who started the InViT is called as a sponsor. But the person who joins this in between, or let us imagine XYZ company started one infrastructure project. They started one infrastructure trust. They sold this to ABC. Now they purchased it, that infrastructure trust, they purchased it from XYZ. Now ABC owns it. Now they will be called as what? Inducted sponsor. Inducted sponsor means nothing but the person who purchases it from the previous owner. We call them as inducted sponsor. He is also included in the definition of sponsor. Clear? The third one is called as investment manager, the person who decides where to invest, how much to invest, and all of that. And the person who implements is called as project manager. Meaning investment manager may have a fund of, say for example, 10,000 crores. He says, put it 10,000, in that 1,000 you put it into airport, 500 you put it into bridge, another 1,000 you put it into highway. But who is taking care of each of the project? They will be appointing each person for each of the project. That person is called as a project manager. These four people together will run InViT. Any doubts? Hello? Here? Huh?
So can you explain that 80% point of the trustee?
The total money that the InViT has raised, let us imagine, is 10,000 crore. Now, how do they use this 10,000 crore? They're telling you, you need to use this 10,000 crore in such a way that 80% of the money you put in should be in such a place. It has to give you a steady revenue, meaning some return has to keep on coming. If that is the case, you invest in that. If not, you cannot invest in that. Example is, as I said, highway. It will give you the toll. It's a steady revenue that is giving it to you. Great, huh? Hello. Understood, huh? This is only called as what people InViT. Online, huh? They online, oh. Okay, infrastructure investments. Next one, you want easy or difficult, huh? Easy or difficult, huh? Easy or difficult, huh? Huh? Lion, tell da. You tell the co-villain. Easy. Securitized debt instrument is done. Huh? Whatever co-villain says. What does co-villain want, it seems? Okay, we'll learn one easy concept only, huh? We'll see our futures, huh? Huh? We'll see future. So that our future will be decided. Huh? Okay. Write down futures. Okay, I'll club and explain two concepts. Concentrate. First, write down futures. Futures it's a contract entered. It's a contract entered between two parties it's a contract entered between two parties agreeing to settle a predetermined product, a predetermined product. So in futures there will be two parties, correct? Let us imagine one person as a seller, one person as a buyer. Yes, if a seller is buying a future contract, we call it as, what do we call it as? Short contract. Or you also call it as short position. If the buyer is entering into a contract, we call it as long position. Now they come up with some predetermined, what is that? Some terms. What is that? One is, it is a contract to settle. It is a contract to settle a predetermined quantity of assets on a predetermined future date, at a predetermined price. note the market price will have no relevance to the contract on the date of maturity. Copy down. Yes, sir. Now, let us try to club two concepts with this. One is futures and one is called as derivatives. Yeah, one of the most people say we cannot understand these two things. Let us try to learn. One is called as futures, one is called as derivatives. Now, let us take one example. We have any example? Let us take Matthew only as our example. Now, people, now Matthew's life is really going good. Matthew is happy about it. You're copying, huh? Yeah. Now, barkombri only. Copied all of you. Copied. Online Anada. Matthew done now. Now we will see here. Now Matthew's life is going good. Matthew wants to get married. When is your marriage, Matthew? When dated? 29. Matthew? No, predetermined date. Now you said this year only, 2026. Huh? Okay. Matthew, in the break he said 2026 August. August month, November. April itkona only. Ningu beda, nangu beda. 2026 April people, Matthew wants to get married. Yeah? Now Matthew, of course, as part of marriage, Matthew wants to mandatorily buy one thing as a part of Indian traditional system. What does Matthew want to buy? Dowry. Yes, Matthew wants to buy something. What? In a wedding, what do you guys generally buy? What is that? Car. Gold. Yes, sir. Now Matthew has one doubt. What? Should I buy gold now? Why? Because gold is at its all-time high. Today, probably year back, gold was trading at 5,000 rupees. I just told you, year back. Today, as I speak, on Flipkart, 1 gram gold is 14,500 rupees. 1 gram gold today. Now, Matthew is confused. What? Sir, what do you suggest? Should I buy gold today or shall I wait? Because April is the need. I want it in April. You suggest me to buy it off today because what if it increases? Or, sir, what if it is going up? So it will definitely come down also because people have purchased everything. Ashada, Akshaya Tritiya, everything they have pumped it up. Sir, it will come down, I know. So can you please suggest? Now Matthew has a doubt. Now what will I suggest Matthew? I will suggest Matthew one thing. Matthew, you do one thing. You enter into something called as a future contract. Now what do you mean by future contract? Matthew enters into a contract in the month of Jan. Saying what? In the month of April, I would need for Matthew minimum 1 kg gold. Now Matthew wants minimum 1 kg gold in the month of April. But at what price? Today only Matthew and the seller. Who is the seller? Let us imagine someone. Joy Lucas. Matthew and Joy Lucas enter into a contract today saying that Matthew will buy 1 kg of gold at the rate of 14,500 per gram as the value. Multiplied into 1 kg, whatever the number comes. Today they are entering into a contract. Now people in the month of April, let us imagine the price can go to 22,000, 25,000. Matthew is safeguarded. Why? Matthew has entered into a contract with the seller saying that on April you have promised me on records that you will sell me the gold at 14,500. You have to sell the seller. You don't have a choice. You have agreed. Hello? Now whatever Matthew has done, that is only called as what people long position. Now what did Matthew get? Matthew got one document saying that the value of this document is 14,500 rupees per gram. Now my question to you, you tell me, does this document has any value on its own? This paper, it's end of the day on paper. Does that paper have any value? Does it have? Now today this paper's value is 14,500. After 5 days, you tell me, the value of this paper will be same or will it go up? Will it come down? What will happen? It will be same? Yes?
Because backed by commodity. It's a mention.
It's?
If it mentioned.
That is correct. But you're telling, now you tell me, Matthew has entered into a contract saying that I will buy this for 14,500. After 1 month, the gold has now touched 20,000. Now what will Matthew do? Matthew will either buy it for himself or Matthew will now go to Saket. Saket will say, Macha, see, I have one contract. I have a right to buy gold for 14,500. If you want, I will give it to you for 19,000. You keep it. Because you still have 2 months. The price may still go up. Hello? The price may still go up, no? Yes or no? Saket will say, yes, doc, correct. I still have time. I can invest and I can leave it. It may still go up. Now Saket will buy this paper. He will keep it with him. Now the hands will keep on changing until April. Or no, Matthew doesn't want all of that. Matthew only can keep it till April and he can go and take the final settlement of gold at his choice. Hello. Now you tell me, did the value of the paper change or not? When Matthew purchased, he purchased it for 14,500. At what price did he give it to Saket? Now my question, how can the value of the paper change? It's paper end of the day. How did it change? Second concept, people, a document which does not have any value of its own. On its own, it has no value. But people, the value is derived based upon some asset underlying it. What is asset under this document? What is there? If a document is deriving a value based upon an asset under it, we call this document as a derivative. What do you mean by a derivative? Derivative means, people, a document which has no value of its own, but it gets value based upon any asset underlying it. Sir, we did not understand. For example, you guys have currency. Does the currency have the value of its own? It's not derivative. If a document has value of its own, it's not derivative. But if there is a document which derives a value based upon an underlying asset, we call that document as a derivative. Too much technical? Understood? Okay. Once more, beta. Let us do one thing now. Yes, derivative only. But I'll tell you. Give me just 1 second. You're able to see, Ade alva. One second. Irra. Okay, now see here. Okay, generally don't do here. You'll understand. Okay, now let us take, for example, now I have entered into one position. Can you see here gold? The gold 10, can you see? Gold 10 here means people, gold 10 grams. I've entered into a contract. It's been around, I think, 3 weeks or something. Now, what did I enter into a contract? I said I want to buy gold. Action you can see. Buy. Futures. Yes, sir. I'll connect the third concept also here only. See. I said I want to buy gold. How much? 10 grams. What is the value? I said I want to buy it for, what is the value? 144,597. That's the value I said I want to buy it for. 1,44,597 when I entered the contract. Matthew purchased 14,500. The value at which I purchased was 144,597. Now today I don't want. I'm happy with the way it has gone up. I will go to Saket. I will sell it at the price today, whatever is prevalent. How much is the price? 145,632. 3 weeks. Sir, what's there in gold, sir? Now come to its sister metal, sir. Something called as silver. Now the silver, sir, what is the price that we entered, sir? 238,366. That's the price I purchased. 2,38,366 rupees. Now what is the price that is going now? 2,57,389. I said I want to buy silver. What do you mean by silver mic? Silver mic means people nothing but micro. Silver micro means nothing but 1 kg of silver. So if you say I have 2 quantities, that means I want to buy 2 kgs of silver. Don't think, oh, you 2 kgs, I'll not buy silver. This is also trade. I buy it for a lesser price. Before. Now my question is, sir, how long can I do this? I said you can sell it. No. People, I have a maturity date. Matthew, when did he wanted to buy the gold? What is the date? April. Even I also want to square it off by April. The time I have is 30th April. By 30th April, if I do not further sell it, then I will have to take this gold. Or I will have to take this silver. I don't want. What will I do? I will further sell it to someone. Sir, how will you sell, sir? People, these are traded on stock exchanges. MCX. That's the stock exchange on which you guys can trade commodities. Hello? Today morning, these are the open positions I can show you now. What and all I can trade? I will personally trade aluminium, zinc, natural gas. It's a commodity. Oil, crude oil, I'll trade. Yeah, these are all the commodities. Sir, why is this good? What are your stock market timings? What time stock market opens? 9:15 to 3:30. Welcome to commodities. Opens at 9. It is open till 12 o'clock in the night. The market is closed only during your night. Market opens at 9. Market is open till 12 midnight. Hello. Understood? This is what is called future contract derivative commodities. 3 things. Correct. Yes, now I'll tell you. Have you ever wondered how is the price of gold and silver decided in India? How is it? How did you see today you go, someone will say 5,000. Someone, now I'll go to some shop in Jainagar, I'll go and buy 1 gram of gold, he is selling 14,500. After 2 days, the same fellow is selling 15,000. My question is, how come a person in Jainagar is deciding the price, 14,500 has become 15k, and my question is, how is that replicated in all the gold shops throughout the country? How come it's same? That means, remember, there is some market which we do not know where the price of a metal is decided. Now, where is it decided? People, there are big giants here. There are big giants. Now, who are there? Like me, I am buying what? Hardly 2 kgs, 3 kgs. I am just doing a trade. I just make, okay, I'll just show you that. Now, okay. See, okay, today I booked this money. and I exit. Done. That's what is the thing I do. That's all. I'm a very small fish. But what does big giants do? They take the delivery. That means what? It can be an institutional investors. They invest in what? Lakhs of quantities, crores of quantities. Now, based on this is where your physical movement of gold also happens. Like stock market, where you are clearly getting the price, here also you need to get the price. This is where you get the price. It says the demand. That's why I was telling you yesterday, trust me people, this year belongs to silver and then gold. Silver is the next precious metal. It is going to boom. Okay, we'll do one thing. 1 second, Irri. Sir, is there any risk? Hey, Macha, don't even think in your dreams of commodities. Yes, simply I'm showing you da, though all of this is very, very, very risky. Yeah, don't even think of it. See, as I speak, I've placed one order. Can you see? This is called pending order. Can you see? Before I came to the class, I placed an order. What? The current price is 258. If it comes to 2,54,000, I want to buy. Because again, by end of the night, it will go and touch 259 is my speculation. I want, so what I do as a trader, I take the benefit of this 4,000, 5,000 movement. I book the profit, I come out. But every day is not yours. Risk, you need two hearts to trade. ನೋಡ್ಬೇಕಾ? You want to see? Is this? Not sure why this is not opening. Okay, I'm sorry, it's not opening. Just 1 second. Okay, not working. Okay, some other time I'll show. Not a problem. But understood, huh? Now, what do I mean by this concept called commodity? Commodities means nothing but people. There are so many commodities in India. For example, like I told you, natural gas. It can be crude oil. It can be aluminium. It can be, these are called as what? Bullions. Copper, zinc, silver, gold, all of this is traded over a stock exchange, but not in a physical form, but in the form of these contracts. Now, towards the end, on the date of settlement, I can either choose to what? Physically take the delivery, or I can choose to trade that particular contract, and people, whoever wants, they will make money. And such type of things are called as what? Three concepts. One is called future contract. Now what is a future contract here? Now here I am a buyer. You saw the contract I have entered. I am saying I will buy that gold, the quantity, whatever we saw there. What is the quantity I said I'll be buying? I'm saying that I'll be buying here, say, two quantities of, take for example, silver, that is 2 kgs. I'm saying I'll be buying it at 2,38,366 rupees. That's the contract price I entered. Now on 30th of April, I will have a right to buy that particular silver at this price, irrespective of the market price that day. Now today only see what is the market price. Today the market price is how much? Where did it go? It was there, no?
You have to log in again.
Can you see this? 2,58,280. It is irrelevant. What is the price I'll be able to buy? I'll be able to buy it at 2,38,000 only. So now what do you mean by a future contract? Future contract. It's a contract entered between two people. That is one buyer and seller. Now I have entered into this contract as a buyer. From my point of view, this is called as what? Long position. Long position means what, people, if at all in the contract terminologies, future contract terminologies, if someone says long, that means he has purchased a buy contract. If someone says that short means I've purchased a sell contract. Meaning, in the same way, other person would have said, I will sell silver at this price. So when I say long, it's from buyer's point of view. If I say short, it is from the seller's point of view. Hello? Are you getting the point? So it's a predetermined date, predetermined asset, predetermined quantity, predetermined price. Silver, predetermined asset, predetermined quantity 2 kgs, predetermined price 2,38,000, predetermined date, that is 30th of April. But when did we enter into this contract? We entered in the month of December 2025. And this is only called as what, people? Future contract.
So seller, like buyer gets benefit. How does seller get?
Now in the same way, what if there is a fall? Now let us imagine today it is 2,38,000. What if it goes into 2,10,000? He will also be covered. Yes? Yes or no? That is what is the biggest advantage. Got it? Yes, I'll tell you why I'm telling you don't do it. There will be a reason, no? Okay, this was, I'll show you both, yeah? Matte, don't get inspired avella beda. Yes, just take it as one thing and you have to move on. This is, one trade. I don't know if you guys are able to see.
Like 9,000.
No. You're able to see the number? Illa? No. 309,168.5. So that means how much? 3 lakh, That's a good number, Very good, I'm searching for one nice screenshot. Wait. Because if we do not explain full, no, then it's not full. No? You should say both. Okay, I'm not able to get one more. I don't know if you are able to see. If you're able to see this number, are you able to see? So you can imagine if you can digest 5 lakh loss in a day, then yes, please come for commodities. Yes, it's a very, very, very risky game. Yes, that's what I'm saying. Good is there, you will get good money, but it's also risky, very, very risky. The commodities segment itself is very risky. If there are 1 crore people who invest in stock exchange, commodities hardly what 10,000 people will be there, or 50,000 or 1 lakh people will be there. That's the number, because it's risky. And second thing, I told you there is one advantage. What is the advantage? Advantage was the market will be open till 12. Disadvantage is you will be up till 12. Stock exchange will close at 3:30. You will sleep peacefully. This will be open till 12. You will be up till 12 for sure. You will not sleep. Yes, I'm telling you, out of 50 people you meet, hardly one person will trade in commodities. It's risky. Getting? Yes. This is how you need to understand the concept. Understood? MCX. So these are the contract notes which are made on a stock exchange. That stock exchange is called as MCX. So there will be a seller. So the trade will be initiated by the stock exchange. That is called as MCX.
Silver. Who are the, in case of shares, company issue shares.
Correct.
In case of commodity,
It is done by the stock exchange. They are called as contract note. Now, for example, if I speak about, now I'm trading in something called as Motilal. Yeah. Now, where are all these brokers connected? They are all connected to one stock exchange. That stock exchange is called as MCX. Now, this stock exchange will initiate a contract note. Now, say for example, April silver. Automatically, there will be both. Buyers will be there, sellers will be there. Now, for example, you saw the loss of that, say for example, 5 lakh. Imagine that day, who gained? The seller would have gained. So always remember, a future works like this. If you are getting 1 rupee, someone has to lose 1 rupee. Who starts it? It's always a stock exchange, MCX. And brokerages are crazy. They get crazy money. Brokerage and all, your stock market and all, nothing da, in front of what these people make. That is as a stock broker, but I'm saying the amount of brokerage that will be here is crazy. Now my question to you, now say for example, now when what is it? If that is also there, we'll see. Okay, now what is the quantity you guys saw gold? Hey, idella only for learning purpose. Matte yeneno kannella hakbedi. Yes, now what is the quantity of gold it is there? What is the quantity of silver? Beda bidi only. Yes, now what is the quantity of gold? 250. You tell me, do I have so much of money? How will I get? Hey, no, I don't have so much of money and all. Now, people, 250. You think I have so much of money, Ada? 250 quantities. Answer is no. Now, how will I get? Welcome to the next concept. In chapter 2, I will teach you. Now, I will not teach you, but I will connect this topic. Remember, the word is called margin. We will physically see in the class how does that work. Yes? Provided if there is actually a good one, we will see. If possible, we will trade also. Yes, sir.
agriculture and spices too, sir.
Every commodity you can trade. Any commodity you can trade. Now, if at all you search for now, because it is tab, no, it is not giving me that options. That's what it is coming here. I need to change the settings and all. But in short, I'm telling you people, you can trade anything, da. You can trade anything and everything. Onions also you can trade, da. Onion also is a commodity. Yes, sir. Currency. It's called currency derivative, commodity derivative. What do you mean by currency derivative? Hey, let us take one example, da. Now, for example, you remember FCCB. What is FCCB? Today I raised money in the year 2024. I said in the year 2026 I will repay money. Now let us imagine we have raised dollars outside India. How much did we raise? Let us imagine we raised around probably $1 million. We raised outside India. Now when we raised money, people, let us imagine $1 was equivalent to 80 rupees in 2024. Now people, outside India, we do not have any revenues. We thought it will work and that's why we raised. But after 2 years, there is actually nothing. We burnt money. There is losses. But still we need to repay this money. We have to repay. Now in 2026, how much is $1? Today it has become 91. If you add commissions and all, it can go to 92. Can anyone try to do $1 million? 1 million is how much? 10 lakh. 10 lakh into dollar. That is how much? I mean, when the money was 80 rupees, we got it. Can you do 10 lakh divided by 80? Do 10 lakh divided by 80, I'll tell you. Huh? 12,500. You just take for 10 lakh dollar, I need to spend, meaning, for example, if I want $12,500, I need to spend 10 lakh rupees. For getting $12,500, you did correct, Ada? For getting $12,500, I need to spend 10 lakh rupees. Correct? Now people try to do 10 lakh divided by 92. 1000? 10,869. People, the value of 10,000 rupees in 2024 was $12,500. The value of 10 lakh rupees in 2026 is $10,869. Where did the difference go? That means what? Logically think. In 2024, we got $12,500. We converted into Indian currency, we used it. We just got 10 lakh rupees. Now people, when I have to repay, $12,500 only. That is what I took. Right? I need to repay 12,500. I went to the bank with 10 lakh rupees only. Sir, can you please give me 12,500? But for 10 lakh people, he did not give me 12,500. The bank just gave me $10,869. But how much should I repay? $12,500. That means what? Now try to do 12,500 multiplied by 92. Can you do? How much? It will be more than 10 lakh. 11 lakh? 50,000. Now people, what is this? Hey, for FCCB, you guys paid interest also, da. You are paying interest also. Okay. Avella bidi. Where will this 1,50,000 go? To repay the same $12,500 after 2 years, I have to spend 1,50,000 rupees more. Neither you got, neither did I get. Where did that 1,50,000 go? This is called as forex loss. Now my question to you, what if in 2024 only you could have predicted, if you could have safeguarded? Now coming to you, what? I will say in 2024, I will go and enter into a contract with the bank. In 2024, I will go and enter into a contract with the bank saying what? Sir, in 2026, I need $12,500. Can you give it to me? Not today. In 2026, I need. Today, I will go and enter into a contract. He will say, okay, sir, what price you will give me? $1. Today, it is 80 rupees. What price you will give me? Neither does the seller know, nor does the buyer know. They will tell as a speculation, I will agree to give it to you for 86 rupees. Who? Bank tells you that I will give you after 2 years $12,500 at the price of 86 rupees per dollar. Now people, in 2024, it is your risk taking ability. What do you mean? If you think you need to be safe, it can be worth. It can become 92, 95. If it becomes 100, what will you do? To be safe, what will you do? I will enter into a contract with the bank. Sir, I will enter into a contract with you today only, sir, to buy dollars at the rate of 86 rupees per dollar. Hello? It's called hedging. Understood? Because I have to repay this money one day or the other. After 2 years, I have to repay. Now, this is called as what? This is also derivative. Why? We both entered into one contract. This contract has no value. But what is the underlying asset? Currency. Hello? This is called as what, people? It's again a future contract. Example. What type of contract? This you can call it as currency derivative. It's called as currency derivative. Understood, all of you? Today you are entering into a contract to settle money in the future. What type of contract? What type of commodity? What are you doing? This is for currency. In our case, it was gold. One is called as currency derivative, one is called as commodity derivative. Understood? All of you? Pakka na? Something. Okay. Write down this one thing. Derivatives. Any doubt in futures? Write down. Derivatives. Correct. Derivative. It is a financial instrument that derives its value from an underlying asset. That derives its value from an underlying asset. The online understanding ada. Types of derivatives. One is called commodity derivative, one is called as currency derivative. Commodities, what we have, whatever we wrote here, no, same explanation will apply. What is a commodity derivative? It's a contract that is entered on a particular date to settle an asset on a predetermined date, predetermined quantity, predetermined price. That's why I said read futures and derivatives together. If it's an asset here, then what will I call this as? I'll call it as a derivative contract only. Understood? Hello? People, you're understanding? Illa. You tell me that. You're understanding, all of you? Oh. Where did that go? I written here only, noda. So ಇದು ಯಾವ್ದು ಗುರು? Okay. You're copied, huh? Can I assume that the concept of derivative is limited to future contracts, or is it for any contract with an underlying asset? Derivative is limited to future contracts. Yes, most of the cases derivatives will be like that, but not always. I'll tell you now. For example, not all derivatives will be future contracts. For example, FC. Oh, okay. We are yet to see one concept. I'll teach you. There is something called as IDR. Now that is a derivative, but it's not a future contract. So I cannot say all the future contracts will be derivatives. I mean, all the derivatives will be future contracts. I cannot say that. There are other classes also. I'll tell you. Okay, write down. Okay, write down. So you wrote that commodity derivative, huh? The other one is currency derivative. Currency derivative. Now currency derivative, I'll be writing 2 under currency derivative. It is a contract to exchange. It is a contract to exchange one currency for another at a specified date for a predetermined price. It helps investors to hedge against foreign exchange risk. Foreign exchange risk, that is nothing but fluctuations, also called as forex fluctuations. Currency derivatives are available in 4 currency pairs. In 4 currency pairs, that is, one is USD, one is Euro, one is, I'm not writing it as shortcuts, this is how we call it. One is US dollar, one is Euro, one is Great Britain pound, the next one is Japanese yen, JPY. we call INR, right? In the same way, every currency will have a denomination. We'll call a terminology. Yeah, I'm not writing shortcut. This is how it is called. One is US dollar, one is euro, one is Great Britain pound, and next one is Japanese yen. Next one is SEBI IFSC guideline. SEBI IFSC guideline says it allows in dealing of currency derivatives as permissible securities on stock exchange in IFSC RBI allowed rupee derivative settlement in foreign currency to be traded on IFSC stock exchange. There is one more point. I'm just writing it here. I hope you guys don't get confused. I'm writing it here. Position limits for eligible market participants per currency pair differ for various segments. Copy down. You sum. So this part I explained you. What is that? Okay, whatever we wrote for currency derivative, what had we written for currency derivative? Currency derivative was nothing but where you have a right to Hedge your risk. What do you mean by generally hedging? Speculation or opposite? What do you mean by opposite? Generally, whenever you drink sugarcane juice, what do they add with sugarcane juice? Lemon. Why did they start adding lemon? Is it because of taste? Sugarcane is, you generally call, right? There are two nature of food. Sugar cane is considered as heat. Lemon is considered as they negating heat. You call it as something cooling. Cooling effect. One is creating that effect of heat. One is cooling effect. That is nothing but hedging. Neutralization. So hedging is nothing but people mitigation of risk. That is in the what is that? In the terminologies of stock market, that is the word we use. What is it called? It is called as hedging. Hedging means what? Hedging means nothing but you are trying to reduce, mitigate the risk. What is the risk here? In currency derivative, I told you when we entered into a contract, $1 was 80 rupees. In the future, I don't know till where it can go. I will reduce my risk by entering into a contract. Now I know maximum I will pay is 86 rupees, not more than that. At least that certainty will be there. That's why we also call it as an hedging instrument. A currency derivative is always called as an hedging instrument. Why hedging? Is because of this. Your risk is reduced. You're paying 6 rupees more when compared to today, correct? But you're also stopping yourself from paying 92 in the future. Agreed? Huh? That is what you wrote. Now, the currency derivatives are available in 4 currency pairs. Now, what do I mean by that? I give rupee. In my example, I got dollars. What else I can get? You can get euro. What else you can get? You can get pound. You can get yen. So currently, our stock exchanges supports these 4 currency pairs. Understood? Huh? Hello. IFSC currently don't bother because I need to explain you right from what is IFSC. There is a chapter for us. There I will tell you. That time try to come and correlate this. You will understand. For now IFSC leave. Clear? Yes sir. So what did we saw? We saw people derivatives. We saw futures. We saw currency derivatives. We saw commodity derivatives. Agreed? Is this clear? All of you? So we saw what people futures, we saw derivative, we saw commodity derivative, we saw currency derivative. Can you explain derivative, commodity derivative? What is commodity derivative? See, end of the day, derivative is nothing but you enter into a contract today to settle something in the future. That's a future contract. Now, why are you entering this future contract for? Imagine if it is to buy any of a commodity. The commodities can be what? There is something called as bullion commodity. Bullion means what people? Gold, metals will come here. There can be oil, crude oil, natural gas, that will come. So, if at all you are entering into a contract today to settle something in the future for a predetermined price, you call it as what? Commodity derivative. Derivative, why did this term come? How is the value of the instrument derived? How did we arrive at that number? Based upon an underlying asset. The commodity itself is the price. If the value of the commodity goes up, the value of the contract will also go up. Clear? Any doubts? Any doubts? Okay. Okay. We have seen REIT, we have seen InViT, securitized debt instruments, derivatives, currency derivatives, commodity derivatives. If you want, read this once. A commodity is a physical good attributable to a natural resource that is tradable and supplied without substantial differentiation by the general public. Commodities trade in physical markets and in futures and forward markets. The spot market involves the physical transfer of goods between buyers and sellers. That is your actual gold shop. That's called as spot market. Prices in these markets reflect current or near-term future supply and demand conditions. Commodity derivatives are financial instruments whose value is based upon an underlying commodity such as oil, gas, metals, agricultural products, minerals, etc. I told you zinc. Zinc also you can trade. Iron you can trade. Since commodities are frequently used as input in the production of goods or services, uncertainty and volatility in commodity prices and raw materials makes the business environment erratic, unpredictable, and subject to unforeseeable risks. What do you mean by that? Silver. Now silver is needed in many of your industrial purposes, your chips. Yeah, idalla, lace alla, your microchips. In that you use silver. I have a dependency there. Now there are semiconductors. For that you need silver. There is a dependency there. Now what will they do? Those industries will enter into these commodity contracts to make sure the price is always known. We enter it today. If I have a thought it is going to go up in the future, today only I'll enter into a contract by making sure that I know what is the price I'm going to buy. Now it's a risk you take. Understood? Hello? Yes? Okay. Now next one. Volatility in raw materials costs affects because and can businesses and can be significant that commodity prices are driven by supply and demand from domestics as well as global markets. Benefits of commodity derivatives include offers alternative investment opportunity. I told you, for people who can trade, they will trade. Next one, offers higher leverage. What is this? Nothing but margin. I'll tell you what is that in the next chapter. What is the margin? Leverage, what is that? No, I'll tell you in the next chapter. A return based on exposure to global market, meaning not only India, everything will be considered, and based on that silver price will be derived. Not only India, Indian circumstance. You know why silver is up? Why simply silver is going up? Why? There should be some reason. China. One is, yes, from Jan 1st, there is a China has clearly said we are no longer going to export silver. China constitutes around 15% of world's silver market. We need silver, right? From China we get around 15% of silver. And they have said from Jan 2026 we are not going to export any more silver for the world's economy. Do you think it's a good news or bad news? So what people have started doing, they have started accumulating. That means what? You can imagine there is no supply. Going forward this 15% will not be there at all. Supply will, demand will increase or not? Demand will increase. Yes or no? And then when demand increases, what will happen? Price increases. Then what is happening? That is what is happening with the price. That is one reason. What else is the reason? The other reasons are, now because of how Trump is doing, till today people used to have dollars as their foreign reserve. Meaning it's called as universal currency. Any global trade we do it in dollars. Because of what Trump is doing, it is becoming highly fluctuating currency. Japan said, I don't want this dependency on dollar at all. I will wash my hands from dollars. Then how will you save your money? World asked. Japan said, I'm going to invest in bullion, means gold and silver. That will be my reserve. Going forward, we will not have US dollar as reserve. Till today, all the countries, whatever reserves you have, meaning your savings, will always be in dollars. Even India's currencies, our reserve is in dollars, not in rupees. The more dollars you have, the better is your negotiating power in the global market. Always remember that. Why? Because we have dependency from one country to other country, no? Do we have dependency? What dependency? Hey, fuel do we have fuel somewhere here? Idella sir, illa right side. Hey, it is petrol bunk da. Who is filling petrol to that petrol bunk? You thought it is coming from underground da? We have to import petrol. That's all. I will not even tell any other thing. As long as we want petrol, that means we are buying it from someone outside. That means we need to pay in dollars only. Imagine the person sending us from abroad. If I pay him in rupees, will he take? I need to pay in dollars. And this fellow is making this dollar so unpredictable. One day he'll say something good, one day he'll say something bad. It is falling, it is rising. Which country would want to bet upon it? That's why what they are doing, all countries are saying enough is enough. We don't want dollar dependency. We are going towards more predictable. That is why people are investing in gold and silver. Who? Till today it was you and me. Now it is governments. Silver in 4 years has increased 8,000 rupees. In 4 years. Today, in 3 minutes, silver has increased 6,000 rupees. In 3 minutes. And that's the volatility. Everyone is behind this metal. It will go until a date when again everything will stabilize. This is now artificial demand. It will stabilize. But yes, that's the curve. Understanding, huh? That's why gold and silver's prices are increasing. That's the reason. Okay. Online clear, futures. Which one? This one. This is not there. How come? Ide book irodu. Check once it's not there. That is, I'll tell you why. Because derivatives were repeated. You will see. So I've deleted one derivative. That's why the point has become, in your book, derivative would have come twice. See, in the previous point it will be there. Derivative topic will come under 2 points. In that place, the benefits will be there. It's not there? You have it done? Page number? 1.24. Irka. Okay, I'll check once. It's not there, huh? It's not there? Okay. I'll check. If it's not there, that one part I'll send it to you. You guys just have a note of it. It should be there. I've not added anything. The only thing I did is I deleted. Derivative has come twice. See, the number, don't get confused. In your book, future will be 15. Here it is 14 because their derivative has come twice. I've deleted once, that's all. That's all. No other difference is there. But if there is anything, I'll tell you. Yes, sir. Page number 40, you check down once. 40. There is no 40. I will check and I'll get back. I'll see whether what is the thing. But don't worry, it will be same only. The only thing I have made difference is this. And I'll check. Sir, are we following ICSI material? No, I am following ICSI material only, people. But if you guys are comparing with ICSI material, now whatever topics I am teaching, you will not be seeing it in chapter 1. It will be in chapter 2, chapter 6, chapter 8. Now you are seeing instruments only, no? That's why in one place I am making you go through all the instruments. That's why I said from this book, if you read this, the weightage will be 12 marks. Yes, sir. Now for example, I'll be teaching a concept called as warrant. In your ICSI material, they have given 25% in chapter 1, 25% in chapter 2, another 50% in chapter 4. I have put all that in one chapter only. So there will be difference, but I'm not saying we are deviating from ICSI material. There will be regrouping of topics, max to max. And if I've added something which is more, not required, I would have clearly put there as additional information or extra gyan. And you can find it as an heading, which you guys can feel free to skip also. In second chapter, you can see one such topic. I'll show you when it comes. Clear? Huh? Hello? Okay, currency. Okay, next let us do something called as options. Okay, write down. Options. What is options? Okay, write down options. Options. Online now. Write down. Options, people. Again, in an options contract, people, there will be two parties. There will be two parties. Seller, buyer. Seller and buyer. Whatever the seller does, that is called as what, people? Put option. Whatever the buyer does is called as, people? You guys might have heard this. Call option, put option. Heard, huh?
Sir, this is when buying an option, right?
Buying an option.
Short selling won't come in.
In simple, I'll explain you. Only that one will come here. Okay, now what do you mean by an option? Option contract. I knew the commodity derivative existed. I did not know how it exists till today. Now, whatever we saw, that is how it exists. It means an option to buy. I agree. People, you will not believe that when we studied capital market and all, my teacher had said future and options are one and the same. Yes. So, the time, Kala. So, when I became a teacher, now if I come and tell people, options and futures are same, you will say, sir, please send another teacher tomorrow. Yes, and that's when I started. In fact, I was taking only company law initially. Capital market, of course, no one will touch capital market. You tell me, who will touch? Yeah, because remember, qualification will not give you experience. They are two different things. Even after I became CS, my knowledge on stock market was, you will not learn anything. Don't think the day you become CS, you can trade. Let's make lakhs. You will lose. Earning will be the next option. Definitely. Because it is not available. Information is not available. And our syllabus will teach us only laws. It will not teach us the concept. But when I had to explain it in the class, I need to know something. No, that is when I started doing my research. Okay, how does it work? Now today it is, of course, it's in our fingertips because of AI. Yeah, but when I started doing, that time I had to physically learn how does it work. One day I tried, because I need to tell now how it works. One day I tried. My first trade only, I lost 7,000. I said, oh, borrow salary went here only. Do I want this? And that's how, because it fluctuates, crazily it fluctuates. I showed you that screenshot now. Imagine how it will be. 5 lakhs. You know how much time it took for me to lose 5 lakhs? 8 minutes. Not one day. 8 minutes. And to get 5 lakhs? Correct? And that is how fluctuating it is. Trust me, it's a it's a gamble. If you think, someone is addicted to alcohol and smoking, if you think that is gamble, I mean, if you think that is a bad habit, trust me, if someone is addicted to stock market, for girls, don't marry such boys. Trust me, your life will be peaceful. If anyone is addicted to stock market, don't go to such people. Amar is looking at me and smiling. I am good. I'm not addicted. Stop staring at me. Yeah. So it is a gamble. So we should learn. I took time to learn. Yeah. And you know how it helped. I learned because of that. Now, for example, there is a concept called as mutual fund. In mutual fund, now the concept is very simple. But when I started teaching, the concept was a little different and difficult. There was something called as call time and all. The concept was difficult. By looking at our book, we were not able to understand at all. I tried. The maximum we had was Google. Where else we'll learn from? You know what I did? I went personally visited one mutual fund. Let us take name also, ICSI. I went to ICSI mutual funds. I said, sir, I want to open one mutual fund. I want to do an SIP in your mutual fund, but I want to know the terminologies. Can you please explain me? He said, sir, this is there. Sir, can you explain me this? Which one? That call money. Can you please explain me this? He said like this, sir, no, I didn't understand. Can you show me? And in the system, that is where I learned that concept. And then I came back. And that is when I taught that concept. So that's where I said, capital market, trust me. Trust me. Pakka. Your capital market, trust me. Yes, sir. When I say the concept, even in your sleep, you will understand. I will not teach you theoretically. I will tell you, I'll make your eyes go through the realistic world. Because I saw it. And I always believe it. If I see it, you will see it. For that, I should know, no? That's why I learned. So, Ammar, it is not addiction. It is learning. Yes, sir. Yes, sir. It was my first class. Which book to follow? You can follow this book. The book I have given it to you. But I'm not saying you should not follow ICSI material. My book is also derived based on ICSI material only. But I would have just personalized it. You can use that also. You can use this also. Just that I'll be going as per the order that is given in my book. So if you want to avoid confusion, you can refer my book. Clear? Okay, write down. It means an option to buy. See this option contract. I was working in this company called Accenture. On the 6 months savings, me, my cousin, my brother, we had all put together. We had saved some money. We did one option contract. The contract was Infosys. 1,20,000 was investment. We invested. And we were seeing like this. 1,20,000 became 80, 80 became 50, 50 became 10, 10 became 100, and it vanished. 1,20,000 became 0 in no time. Options. Yes. So wherever they say it's easy to make money, ayyo, no, not at all. That was really hard earned savings. Saying that too when my career started. It is difficult to make back that money also. And that's how tricky these things are. So my first ever trade where I lost money is options. Infosys. Because I did not know. It was a date of result. Result day. We should always stay out of stock exchange. With experience we learn. From Jan 22nd onwards, don't go towards stock exchange because the stock exchange will be very volatile. Why? Budget. Stocks will move like a drunken horse. You can never predict it. No fundamentals will work after Jan 22nd till budget is done and 1 week cool off period. Just to stay outside and admire the stock exchange. Wow. Yes, only then we will be safe. Again, experience after losing money. That's how it is. Getting the point? Yes. But we have to learn. That's always there. Now, for example, probably 4 weeks back, there was one IPO called as SME IPO. Regarding that, I'll tell you. So, this IPO, the minimum investment we had to do was 2.7 lakhs. The company was Worksmate. It's an SME company. So, I did this IPO. In my life, I think I got some 3 IPOs or 4 IPOs in the last 11 to 12 years. I got some 4 IPOs. God's grace, I got this IPO also. I'll tell you how lucky I am. This was, I think, in November 23rd or 24th. I got this IPO. So, okay, invested. I got allotment also. And the date of listing, the stock listed with a 90% premium. Now, what do I mean by that? I invested 2.7 lakh. I got a return of 2.25 lakh on day 1. Worksmate. Last week there was one more SME IPO also. It's called Shamdani, if I'm not wrong. Similar thing. 650 times oversubscribed on stock exchange. Listed probably last Friday or this Monday. I'm not sure on the date. Listed with 110% premium. 2.7 lakh on day 1. Close to 3 lakh. Shamdani. I did not get that, but Worksmate I got. So stock exchange is that. One place you will get, one place you will lose. But IPOs are something we need to know. We have to invest. So this is what I'm trying to tell you guys. Learn. Don't invest today. Learn. What is good? What is bad? Learn. That is good. Understood? Huh? Hello. Now write down. Sir, can you please? Anna, please. No suggestions of stocks and all. It means an option to buy or sell predetermined quantity. Predetermined quantity of shares on a predetermined date and price. Put option means what? It's an option to make delivery. Call option means what? It's an option to take delivery. One is an option to make delivery, one is an option to take delivery. And options can be of 2 types. One is called as European option. One is called as American option. One is European option, one is American option. European option. The contract can be exercised. The contract can be exercised only on the date of maturity. Only on the date of maturity. India follows European option. India follows European option. American option means what? The contract can be exercised on any day before maturity. On any day before maturity. Before maturity. Copy down. This is called as an option contract. Now, what do I mean by an option? Now, try to first understand it in simple language. People, now see here, next 5 minutes, focus. Now, let us imagine, you guys, all of you copied. Yeah? Okay. Now, for example, anyone staying in PG here nearby? Anyone? Okay, PG. Yes? Okay. So, what's your name? Lakshana. Okay. Lakshana came, she wanted to stay in one PG. Okay. So, you might have visited how many PGs in total? 4. Lakshana went to 4 PGs. Yeah. So, you might have seen first one PG, second, third, fourth. In that, which one did you like? Last one you liked. Now, when you went and checked the last one, did you ever felt that can I go and check the next one? Or when you check the second one, were you convinced with second one, I should check the next one and come back? This thought did you have, or you were completely sure that I like that fourth one only, or I like that second one only? Was a thought there?
So by the time I was seeing fourth one, I was tired, so I got convinced with fourth.
Sir, I have seen worst. Fourth one was at least somewhere nice. Correct? Okay, now my question is, okay, fourth one you selected. In the 3, was any other PG was also in your consideration? Which one?
Third one.
Third one was also good?
Yes, sir.
Okay. Now let us introduce one scenario. Now Lakshana wants to go for a PG. She's seen 4 PGs. She thinks third is also good, fourth is also good. There is that comparison. All of you in various places you will have this. You will feel this is good, this is good. Now people imagine a scenario. There is only one last room left. And the PG owner has said, Lakshana, you just have another 2 hours time. You need to tell within this 2 hours. But Lakshana, now you are feeling the pressure. You need time. You ideally need at least another 4-5 days time. Now what can you do in such scenario? Or what can all of you do? You will give some money and advance. Oh, what is that called? Booking advance, token advance, something like that. Okay, can you tell me why do you pay this? What is the importance of token advance? What will happen? Okay, so Lakshana is going and paying the token advance of, I don't know how much it will be generally. 5,000 rupees. Okay, now Lakshana is telling you need to pay, it is 5,000, huh? For what is the value of the room? Even if it is around 12,000-15,000, token advance is 5,000. They will not give it back. Okay, correct. Non-refundable. Okay. Now people, you are saying that Lakshana, you can deposit 5,000 rupees. So now you will be at peace. What is your peace? If I don't find anything, at least for the next 1 week, this fellow is there, I will get the room here. At least my interest is safeguarded. Agreed all of you? Pakka? Same terminology. Put it in stock market. Whatever Lakshana did is called as people option contract. Now what do I mean by option contract? Lakshana paid 5,000 rupees to the third PG owner. She said, sir, I will come back. Give me 1 week time. That is what you will say and go. Hello? Now after 1 week, Lakshana found a better room. She found a better PG. That is PG number 4. Now my question is, will Lakshana go back to 3? Her case only. She found 4 interesting. So what will Lakshana do? Lakshana will enter into a contract here. She joined this PG. Now my question to you, what happened to this 5,000 rupees? It's gone? Are you lost, no Lakshana? Why did you give this 5,000?
I got a better place to stay.
But 5,000 gone, no? Understood, ah? Exactly. In the stock market, this 5,000 rupees is called as premium. Now what is that? Put it in the case of the example where I lost money. Same thing we'll see. What did I bet? I said by the end of next 2 months, by the month of March, Infosys will reach 1,500 rupees price. I said Infosys will hit 1,500 rupees. And I will buy Infosys shares at 1,500 rupees. I said that is what will be that particular price. Now people, I might be, okay, you can think like this. Infosys may go to 1,500, may not go to 1,500 also. Anything can happen. So what I will do, okay, A and B will enter into a contract. A will say, I will buy Infosys shares for 1,500 rupees. Are you okay with it? Now B will say yes, A will also say yes. They both will enter into a contract, and that contract is called as people option contract. Now people, A is not sure. Infosys may become 1,500, Infosys may become 1,200, Infosys may become 1,700, Infosys may become 1,000 also. Agreed, huh? So what did A do? Instead of directly buying Infosys shares upfront, what does A do? A will say, Mr. B, do one thing, I will give you something called as token advance. How much? I will give you some token advance of 100 rupees per share. Yeah, give me 2 months time. I will come back and buy Infosys shares from you for 1,500 rupees. Trust me, I will come back. A will make a promise and I will pay 100 rupees per share as token advance and I'll go. Now how much time I have? Just like Lakshana had 1 week there, I have 2 months here, or 1 month here, or 3 months, based upon the contract. It depends. It can be 1 month, it can be 2 months, it can be 3 months, as the case may be. Hello? Till now understanding? Now you tell me. After 2 months, Infosys real price in the market fell to what? Let us imagine 1,500 was our contract price. After 2 months, Infosys price became 1,200. Now what will I do? I will go to B and I will say, I told you that I will buy for 1,500, but in the market I am getting it for 1,200. Now you tell me, where will I buy the Infosys shares from? Will I buy it from B at 1,500 or will I go to the market and buy for 1,200? Where will I buy? I'll go and buy it in the market because I'm getting the shares at a lesser price compared to the contract. Hello? Agreed? Now what will happen to this 100? Will I get back? This 100 is a loss. Now I asked Lakshana, why did you give 5,000? She said, sir, I should also be safe. Correct. Now you did not know what price Infosys shares can go. Now you see the second scenario. Sir, 1,500 after 2 months, actually in reality it became 2,000. Now you tell me, what will you do? Will you go and buy the shares from the market or will you go and buy it from B with whom you had entered into a contract 2 months back? Where will you go and buy? With B? Why? Because we have agreed for a contract lesser price than what is the market price today. Hello? Hello? Now what will I do? I will go and say yes to B. Please give me the shares. I will settle the money. I will get the shares from B. So now what is this called? Saying yes to B, saying no to B. What is this called? When you say no to B in the options contract, we call it as lapse. Meaning I will let the contract expire, lapse. I will not go back. Meaning now Lakshana, she gave 5,000 rupees for the PG, third PG. Will she again go and tell us, sir, I don't want your PG? She will leave it. She also knows it is non-refundable. She will just leave it. That is only called a lapse. Hello? Sir, no sir, I got no other best deal. Lakshana will go back to the third PG only. She will say, sir, I said no, I'll come back. See, I came back. See, I told you right. I'll come back, I came back. She will exercise the contract. That is the word you use. What is the words? One is called as lapse, one is called as exercise. Hello? On the date of maturity. On the date of maturity. Your contract will be for 2 months. On the last day, what do you want to do? That is what you are doing. Yes, sir. To keep it very simple, India follows this method. On the last day is when you will decide. But Americans, they can decide whenever they want. That's what you wrote. There are 2 types of options. One is called as European, one is called as American. European, you can exercise your decision only on last day. Meaning, Lakshana cannot come on third day and say, I want your PG. Lakshana also should wait for 7 days as per the contract. But American option, Lakshana can come on second day also, third day also, fourth day also, and she can say, I like your PG. That's the meaning of the words you wrote. She goes for the fourth PG. The contract with third PG will come to an end. So she will not get back the 5,000 rupees. It's lapse. Understood? Machas, too much technical, na? Illa alla? All of you? Understood? All of you? All of you? Understood? Pakka na? Illa. We are not seeing there. Understood? Sure? You only? Okay. Some question here?
Sir, why we should sell for 1,500 when market price is 2,000?
Very good question. Now the question is, now you think from the PG owner's point of view. If I don't take this from Lakshana, I don't know whether anyone is going to come or not. That's why that one room is vacant, no? Now, in the same way, I may not find a seller or a buyer in the future. Even I am not sure. See, today it is 1,300. Just like that currency derivative. Why did bank agree to give it for 86 rupees? See, when we enter, we are not, the price might be different. See, when we are entering, that means, okay, let us see one practical scenario. On 1st Jan 2026, Infosys share price is 1,100. And I am telling, I will come and buy Infosys shares from B. A is telling, I'll come from you. I'll come to you and buy this shares from B on, let us imagine, 31st March 26. What is the price? We both agreed on 1,500. Now you tell me, from B's point of view, what if it falls? B will say, hey, 1,500 is offering today. Let me be safe at least. B will say, okay, I'm okay with 1,500. What if it falls? B is also sure he will get that much, no? Hello? Agreed? Pakka na? Now, his question was, what is your name? Jayant. Jayant's question was, sir, you are saying A will buy. Why will B sell? That is what was Jayant's question. Now, why will B sell is, I am not sure what the price is going to be after 3 months. See, today when we see, now for example, people, let us take that example also. Let us actually see what is Infosys share price today. There only we got 1612. Now you guys predict on March what will be the price? 1,900? Pakka? Okay, we'll do one thing. One second. You can see that segments, I'm trying to zoom, it is going away. mutual funds, under mutual funds, commodities, F and O. That is where we belong. Now, sir, what is that I'm trying to see? Now, let us take, for example, can you see Infosys third option, 30th March 2026? Hello. Now, Infosys, we have all these options. Can you see? Hey, you're able to see the drop down, huh? In that, see what and all words are there. Ignore first three. We have something called as option, call, strike 1280. Can you see that? Huh? See in the last one, next to my hand, what does that word say? Put. You have call also, you have put also. Can you see this? Huh? What is put? I'll tell you. For now, ignore, but I'll come back. Now, let us select something. Okay, let us take, for example, this one only. Now, let us take, for example, 30th March 2026. Infosys option type. C means people, call. P means people, put. That's the methodologies we use. Strike price. Matthew, tell what do you think will be the price in March? People, this is all the bets. Now you predict. Real life. If you can predict good much, you can make money. That's all. As simple as that. If you guys can predict. Now use whatever Einstein brains you have. Now why do we have 1200 here? What if it falls? Are you getting the point? Hello? That is how it is. Now I'll select. See the price. Now Matthew says, how much Matthew? 1920. Okay, let us select 1920. Now Matthew's price is this. It is not traded today. Okay. Now what is this? Let us take the price. What is the spot price? No. What is this? 19 rupees. Okay. Now people, as of today, what is it? The price. She paid advance, no? Now to get this price, what is the advance Matthew has to pay? Matthew has to pay around 19 rupees. Yes? You can see this previous close, 17.30. Can you see this? The data we have as of now is this. So the premium, that is the token advance he needs to give, is 17.30 rupees. Understood? Now what will happen? Matthew will bet it today by investing 17 rupees, saying that Infosys will touch 1920. That's what he is buying. That's the contract it's called. Let us imagine, what is the Infosys share price today? 1600? Imagine if it is going towards 1700, 1800, 1900. If it is going towards that, this premium will start increasing. Because his prediction is becoming true. 17 rupees will become 18, 19, 20, 30, 50, 100, 150. Because it is now becoming more predictable. You can see it will touch. Are you getting it? Now how much did Matthew invest? 17 rupees per share. How much did that premium become? 150. That is the gain he made. So now what if share price of Infosys is 1600 today? What if it becomes 1500? The 17 will become 15. Sir, what if it becomes 1300? Means what? Matthew predicted it this way, but the share went this way. Then this will start falling. It will become 5, it will become 4, it will become 3. On the last day, imagine he predicted 1920. Imagine the last day it become 1300. That means his target did not meet. This will become 0. Because it did not meet. Now what will be the loss of Matthew? How much? 17 rupees. Don't you think people 17 rupees means everyone will come and trade? There should be some seriousness, no? With 17 rupees and all they will allow. How much you need to invest? You need to invest, people. Minimum quantity is 800. 17 rupees into 800. See how much it will come. 13,600 is the minimum investment you want to buy one contract of this. Now you understood how mine became zero? I predicted a train will go inge. Train went inge. People, real life I am telling you, this is how it will work. This is what is called options contract. The premium will start increasing if your prediction is right. So 17 will become more because it is going in your path. Risk is high. FNO is always high. Futures and options are always high. It is. The reason is what is the minimum quantity you are trading. I'll tell you how high. Let us imagine 17 becomes 50, which can happen in one day. Do 50 into 800 minus 13,000. You can earn 27,000 in one day. Good only, no? Yes, sir, good. We will leave and go now only. But yes, that's how it is. Understood? Got a fair idea? All of you. Now we can predict the other way also. Now I can select here a different strike price. Now for example, let us imagine expiry date, let us take January. What is the price? Now what is the call option we took? Now 27 January, this contract will expire. This would have started 3 months back. That means in the month of November. That day someone would have guessed this share in the month of Jan will reach 1,640. Someone has predicted. What is the share today? How much today? We just saw, no? 1,620. Is it going towards you or not? Look at the premium. How much you invested? 17 rupees. How much? Now do 289 into 800 do. Keep calculator inside. That is the money you will get. How much you invested? How much you got? Risk return? Don't do. Yes, all calculator. This and all is good in calculators only. When we do, train, ekdam reverse. It will not let out go front. Yes? Understood all of you? This only is called as people options. Any doubt?
During expiry, they have to buy the stocks. They have to take delivery.
I'll tell you that. Now this is part clear. Hello, all of you. Now you guys should have asked one question which you guys did not.
Futures we can share.
I'll come. What are the difference in futures and options? Futures, macha. What was the price of the gold and silver? You should have that whole money. Options. What is the price of Infosys? What is the price of Infosys? 1,600. How much did you invest? 17 rupees. That's the difference. In futures, there is no choice. On the last day, whoever has this paper, you have to take that gold. By mistake, I gave it to you and I ran away. Meaning I am selling it, no? You saw those 2 contracts in my portfolio. Let us imagine I forgot. The last day, I have to take that gold and silver. I don't have a choice. Hello? Now my question is, Lakshana, did she have a choice or not to go to that PG or not? Did she have a choice or not? That's why this contract is called as an option. Meaning, Lakshana has a choice to say yes or no, even on the last day. Meaning on 27th Jan also she will say, hey, I will not buy the shares from you. What will you do? She can say, hello? Yes or no? Gokul is thinking, sir, then no respect for seller. Lakshana will say, I will not buy, is what you are saying. Correct. Lakshana can say yes or no. It is Lakshana's choice. Gokul is telling, then who will protect the seller? Who will protect the seller? Seller is also having an advantage. What is the advantage? Didn't the PG owner get token advance? You got it or not? That's your benefit. That's your profit. Understood, all of you? So remember, whoever is an option holder, whether seller or buyer, both will have to pay premium. If at all buyer has an option, you call it as a call option. If a seller has an option, you call it as a put option. Opposite, a seller said in the month of March, the Infosys share price, I will sell it at, we entered into a contract today. What? I will sell it at 1000. You saw now, 1610. Yen in 2 months, it can go to 1800. So seller entered into a put option today. Meaning B is telling to A now, I will sell you. I will sell you. Till now you saw it from the purchaser point of view. Now I am telling you from the seller's point of view. Now B is telling, I will sell you on 30th of March, say 800 shares of Infosys at the price of 1800. Are you interested to buy? Someone said yes. Now let us imagine on 31st of March, the share price in the market became 2100. Scenario number 1. Scenario number 2, the share price became 1600. Scenario number 2, share price became 1600. Now you tell me, what will B do in first scenario? Will he sell it to A at 1800 or will he go and sell it in the market at 2100? What will you do?
Sell it for 2000.
Will he sell it in the market or will he sell it to A?
He'll sell it to A.
You guys understood the concept? B and A entered into a contract. B said A, I will sell you Infosys shares at 1800 rupees on 31st of March. They entered into a contract on 1st Jan 2026. That I will sell it to you at 1800 rupees per share. We entered it today. Now 31st March came. The share price, actual share price in market is 2100. But as per the contract, I agreed to sell it to him at 1800. You tell me, where will B sell? Will he sell it to A or will he sell it in market? Market? Then what about A? He has that call option. No option is there, no?
You also have the options.
So remember, call and put together cannot exist. Meaning, now this is important. If a person is having a put option, the buyer has to go with what seller says. If seller says I will sell, you will have to take. If seller says I will not sell, you will not get. But if he says I will sell it to you, you should take. If seller says I will not sell it to you, you will not get. In a put option, the option is with the seller. In the call option, opposite. The option is with the buyer, Lakshana. If she wants, she will buy. If she does not want, she will not buy. Hello? Means what? She has given token advance of 5000. If she wants, she will go back. If she doesn't want, she will not go back. Does he have a choice? Does he have a choice in that 1 week? No. So remember, who paid token advance here? Lakshana paid. Lakshana had a call option. The other person has an obligation. So always remember, option holder has an option. Other party has an obligation. Meaning, if he tells you to jump, you have to jump. If he tells you to sit, you have to sit. Why? Because he is giving you token advance called premium. You are taking that, no? Then listen to what he says. Hey, you PG owner, you took that 5000, no? Then listen to what she says. Then why did you take that 5000? You are also greedy, no? You are also greedy, no? Then why did you take that 5000? Lakshana will have a upper hand in call option. In put option, PG owner will have an upper hand. That means the seller will have an upper hand.
So whether the seller will give a premium to the A?
Yes, you will get. Because now you are giving the choice. I will buy, sir. Whenever you tell me to buy, I will buy. So you will get premium. You will get benefited. Getting the point, huh? Hello, all of you. Yes? Pakka? Any doubts? Sir, for the call option, even if the buyer decides not to buy the share from the seller, he will steal the token. I mean, yes, correct. You will lose the token advance, correct. If he decides to buy it, that I will tell you. People remember, okay, Veda, your question. Now, people, in real life and in this call option, there is only one difference. What is that? Now, Lakshana goes back to the PG. She selects, sir, I want third PG only. The rent is people, first month is 15,000. How much will Lakshana now pay from her pocket? 5,000 is adjusted, that advance. What you need to pay is 10,000. Correct? No? Real life you tell me. Correct? No. 5,000 whatever you have given as security deposit, that will be adjusted. Agreed? Yes or no? In real life, real life market we will go. Correct? In market people, this adjustment cannot happen. That 5,000 is non-adjustable. Now what do I mean by that? Infosys share price was 1,620. The premium now has become 250 rupees. So do not understand it as if I pay the difference I can get the share. No. 250 is the advance you are giving to get an option. You want that king treatment, no? If you want, you will buy. If you don't want, you will not buy. That option will come with a cost. That cost is this premium. Non-refundable, non-adjustable. Hello? Pakkana? Understood? Sure? That's all. That is option. See?
Sir, if the call option for the lapses, the money will go to
Perfect. Seller.
opposite.
If the seller lapses the option, money will go to the buyer. Correct. I didn't get you.
Minus 13,000 is the premium.
1620 into 250, why?
That would be the amount which market, this is the market price.
1620 is the market price, correct. Okay, I'll tell you how much money we will generally get. How much was the premium? 250 rupees. What is the minimum quantity? That's all. If you are an option holder, call option holder, you will get this money. Put option holder, they would have done vice versa, opposite. We will see that also an option. We saw the call option, no? How much did 250 into 800 come? 2 lakhs. This is the money you will have to pay as premium. That is a loss for you. You will never get back this. The opposite of it is put premium. That is what we will see now. Option type. See, can you see CE and PE? CE we saw till now as a call. PE will be put. No guess. Now you tell me, where will be the premium be highest? Let us take January maturity only. See, 81 rupees today. What do I mean by that? A seller, to freeze the price, I will say, I think the share price will go to 1680. What if it does not go? The premium he needs to pay is 81 rupees. Are you getting the point? Now see, can you see this minus 2.50 fluctuation? If it is going near, it will increase. If it is not going near, it will decrease. Hello? Now see, you check the different price. Let us imagine, let us take 1500. Because it has passed that price. I said it may go up to 1500. It has gone 150 points up, and still 20 days is there. That's why what has happened. Look at the premium, 6 rupees. Now you tell me what will this happen on 27th of Jan? It will become 6, 5, 4, 3, 0. Because your target has surpassed. You predicted it will be 1500. But where is it going to? In real life, it may touch 1700. Getting the point, huh? Hello? Getting the point? Now, what do I mean by that? I'm a seller. I said I will sell at 1500. I paid a premium of 6 rupees also. In real life, what is the price? 1700. You tell me, will I sell it at 1500 or will I sell it at 1700? 1700. Now how much? So for this option to sell it at 1500 or 1700, I need to pay a price. What is the price? I will get that by paying 6 rupees into what is the quantity? Eppadi? Allah, look at the quantity. 2000. Now 2000 into whatever is the thing, 6. Now imagine what if it is 259 into 2000. That's the money we need. Hello. Now you tell me from seller's point of view. This is a real life scenario. Now you agreed to sell it at 1500. In the market it is 1650. Where will you sell? Now you tell me what is the net gain or loss to the seller. How much does he lose? He will let the option lapse. Whatever I paid, 2000 into 6 rupees, I will not get it back. It's okay. I'm getting more in the market. It's okay. Leave it. Now remember, this is very, very important. Both the people cannot enter into a contract. That means in the same contract, you cannot have call and put together. If one has a call option, the other person has an obligation. You don't have a choice. Hello? Is this clear, all of you? That's all. This is your option contract. Any doubt? Tradable. It is tradable on stock exchange. Today, if you sell it, it will go to 6 rupees. That's how people like, RS, why do I need 2000 shares of Infosys? What will I do? I will take, Beda, yaru matbedi. Again, simply I'm telling. The price of this option was how much? 6 rupees. 6 into 2000, how much? 12,000. Now, it's a risk you need to take. It has already surpassed. Let us imagine the market is bullish. Infosys will definitely not come back less than 1600. The 6 rupees will become 0. Are you getting the point? So, what we generally do is, we sell it. It's called as option selling. I can sell it at 6 rupees. I can buy it back at 1 rupee. That's your profit. 5 rupees per share into 2000. 10,000 rupees you can gain. Then, good only, no? So, you can sell, buy, all that is there, but let us not complicate. Okay, na? Yes, sir. I hope you're understanding the. Not sure if I'm teaching you more or less. Okay, do one thing. Solve this problem. Come on, people. This is your moment. The moment what you all are waiting for. Let's start directly with difficult or easy now. Difficult, no. Okay. Okay, easiest one. This Akshay buys. Do it. This one. 1 second, I'll zoom. Just give me 1 second. Backbench able to see it, Yes. Online, I hope you guys are there, alive. Please breathe. Do this. All of you try. Please don't just stare at the screen. Your logical side should work. Is it easy or difficult? Dead easy. That's why 3 marks. If it's tricky, you will get 5 marks. We'll do. We have some 2-3 questions. You do this first. Whatever we have seen concepts till now, it is out of that only. His loss will be 1 second. Will open now.
His loss will be 3,495.
Loss will be 3,495. Online, you can also give me your answers. Loss or profit? Loss is 4680. 6,200. Okay, very good. I like this class. $3,495. Okay. Abba. Same answer, 2 people. Abba, baba. Same answer, 3. Ayabba. Ingena? Yeno, yada. 3495. ಅಬ್ಬಾ ಬಾಬಾ ಹೆಂಗೋ ಏನೋ ಗೊತ್ತಿಲ್ಲ ಸರ್ 4 ಸಮ್ ಏನೋ ಮಾಡಿದೆ ಸಿಂಚನ ಡೂಯಿಂಗ್ ಸರ್ ಆಗತ್ತೆ ಒಂದು ಸ್ವಲ್ಪ ಇರ್ರಿ ಇವಂಡಿ ವಿಕಾಸ್ ಗಾರು ಡನ್ನಾ 4680 Amar, Sam, what is your number? Doing, Abba. Matthew, Anna. Hey, in my name, you don't message someone. He's messaging, correct, Noda? Sam is messaging someone, Noda? See, Sam said yes, sir. Lakshana? Gokul? 1 minute. Okay, 1 minute. Loss of 3495. Okay, last 1 minute. They ಹೇಳ್ಕೊಳ್ಬೇಡ ಇರಾ ಏ ಸಾಕೇತ್ ಮುರ್ತಿರ್ಗ ಮುಂದೆ you guys only try, even if it's wrong, it's okay, you will learn. Oh, online is strong. Every same number. Night. Number what? 4,500. Round figure. Correct. Who will have loss of 680, 720 and all? Correct, no? Okay, 495. Okay. 4680. Okay. Any other numbers we have? Matthew, na? You did A plus B whole square only, no? Hey, 2 numbers you have to do plus and minus. That's all. How much? 3,000. 3,000 how much? 3,000 only. Profit or loss? Not sure. Matthew, you got plus or minus?
Plus.
So that is profit only, no? Matthew. Yes, you are 3495. Okay. Anna. Okay, let us see the moment of truth. What is the answer? 3495. Yay! Net loss is 3495. Yay! Nice. Now, how did we arrive at that? Try to see. Now, what is that telling you? You entered into a future contract. Agreed? Hello. Try to see. Macha. In our book, was there any formula? Na? Illa. Promise. One future, one option question will be there. Promise. Pakka. So, no and go. Now, see what I'm telling you. Akshay buys 500 shares of PQR Limited at 210 per share on the stock exchange platform. In order to hedge the position, he sells 300 futures of PQR Limited at 195 each. Due to fall in the share and future price by 5% and 3% respectively on next day, Akshay closes his position by counter transaction, find out his profit or loss. What has he done? He has done one buy, one sell. Now what has he done? There is a share called as PQR Limited. What did he do? He has purchased 500 shares at 210 rupees per share on the stock exchange. Can you guys do? How much is 500 into 210? We have here only 1,05,000. He has invested 1,05,000. Okay. Next one. What else he has done? In order to hedge the position, you know what I mean by hedging? What if it falls? So he has done the opposite also. So that's why what he has done, he sells 300 futures of PQR Limited at 195 each. That means what? He has sold 300 shares at 195 rupees each. How much? 58,500. Now next what has happened, people, due to fall in share and future prices by 5% and 3% respectively. So what has happened? The 210 has fallen by 5% and the 195 has fallen by 3%. It has come down. So that's why what did he do? On the next day, Akshay closes his position by counter transaction. What do you mean by counter transaction? I have purchased, hence I sold. I have sold, hence I purchased. Always remember, if at all I have entered into a future, you saw the gold, I have entered at 2,38,000. Opposite means what, people? I have to sell it off. If I have sold it, I will buy it. You can do both. Are you getting the point? If you want, you can buy and then sell. Or you can sell and then buy. Both are allowed. Hello? Understanding, not understanding? Tell me, be vocal, da. Counter transaction means what? See, I purchased at 210. You take my gold example only. I thought the gold price, the silver price will touch 3 lakh rupees. So what did I do? I purchased at 2.5 lakh rupees thinking it will go up. Counter transaction means what? If at all I have purchased today, tomorrow I am going to do the opposite of it. What is the opposite of purchase? Sell. So they are telling you in a complicated way, he has purchased today and he is going to sell it tomorrow. Yes, sir. People, now this can be a little difficult to understand because this question is asked once in our attend. I am explaining you. Now imagine I expect the gold to fall tomorrow. If it is going to go up on a stock exchange, you can make profit. How? Invest it at low price, exit at high price. You can make money. This is simple. Understood? Invest at 2.5 lakh, sell it at 3 lakh. Easiest. Remember, stock exchange also give you an opportunity. If you think the market is going to fall, you can first sell and then you can buy. That is also allowed. What do I mean by that? Now today gold is, let us imagine, 2 lakh rupees. If I think it is going to fall, now what I will do? I will sell the contract, not buy. I will sell. So I will first sell the gold at 2 lakh. The market will start falling. It will come to 1.6 lakh. Now what I will do? I will buy. Understood? Anyone? Hello? Now for example, Amar, I'll give you one calculator for 50 rupees. You want to buy or not? Say yes. You want to buy or not? You want? Now I said, okay, Amar, you come and collect in the evening. Again I repeat, Amar, do you want calculator? I will sell you. Come in the evening and collect it. Okay, now people, I don't have calculator. You tell me what do I do? I've agreed to him that I will sell. On a contract I have agreed. Now you tell me what do I do? Now I'll come outside, I will search for a calculator for some price because I have to give it for Ammar. If not, Ammar will file a case on me. Hello. Now you tell me, I will come and buy a calculator. Now there are two people, Saket and Bhargav. Now Saket is telling the calculator will cost 80 rupees. Bhargav is telling, sir, I will give you the calculator for 30 rupees. Saket is telling 100 rupees. Bhargav is telling 30 rupees. You tell me from whom will I buy the calculator? Bhargav. I'll buy it for 30 and I will sell it for how much? Did I make profit? Correct, Yes, sir. This stock exchange will allow you to do. Now gold is falling. I know it is dipping in front of me. What I will do? I will blindly come and say, I will sell gold at 3 lakh and I enter into a contract. But by end of the day, I will have to buy it from someone because I have to enforce this contract. That's why you have to do the counter. Counter is opposite of it. Stock exchange will give you that option. You can make money upwards, downwards, both. Understood all of you? That is what they are telling you. So what he has done one upwards also. That is, he has said, I'll buy. If it increases, I will sell. What if it falls? He has done both together. That is only called as what? Hedging. Understood? Now try to do what they are telling you. He has purchased 300 into 195. This has become 58,500. The first one is 500 into 210, 1,05,000. Next day, what has happened, people? Due to fall in the share, the future price by 5% and 3% respectively. Now, what has happened? The 210 people. Now, how much has this fallen down? 210 has been reduced by. Can you do how much it is? 500 into 210 minus 5%. How much is? 210 minus 5%. How much is it? 199.5. So do 199.5 into 500. 99,000? This correct? 99,750. All of you got this? That means what, people? I thought the share price will go up. I invested 1,05,000 rupees. Next day the market fell by 5%. My 1,05,000 has become 99,750. Did I make profit or loss? Loss. This is clear. Now do 1,05,000 minus 99,750. How much? 5,000? It's a loss or profit? Loss. This is clear? Hello? Pakkana? Now this concentrate. Now people, the next contractor, I have sold 300 shares at 195. I have sold 300 shares at 195. Now how much did that share price fall? 3%. Now do 195 minus 3%. 189. Now do 300 into 189. 56,000. Amar, I told I will sell it to you for 58,500. The calculator, I purchased the calculator for 56,745. Did I make profit or not? I made profit. I have sold. I have given my calculator to Ammar at 58,500. I purchased the calculator from Saket for 56,745. Did I make profit or not? My buy price is less. My sell price is high. So did I make profit or not? How much? Do the difference. 58,500 minus 56,745. How much? 1,000? So all of this was done by Akshay only, no? Here he made a profit. Here he made a loss. So try to do net. 5250 is a loss. 1,755 is a profit. Do minus 5250 plus 1755. You guys will get this answer. ಪಕ್ಕನಾ? ಹೆಲೋ, ಎಸ್ ಓ ನೋ, ಏನೋ ಹಲೋ, ಪಕ್ಕಾನಾಡ? ಐ ಹೋಪ್ ಯುವರ್ ಅಂಡರ್ಸ್ಟ್ಯಾಂಡಿಂಗ್ ದ ಆನ್ಲೈನು. Okay. This was easy. One. This was easy only, no? No. Okay. That was easy only, I believe. Okay, let us do one thing. One more question. We saw one in futures. Let us do one in options. Taka do. Start. Zuma. Gudda. Start. Gudda Gokul. Whatever you want to do. என்ன பண்ணணும்? Solve பண்ணணும். What else you will do? Options. என்னம்மா என்ன ஆச்சு? என்ன கன்ஃபியூஷன்? எப்போனா யாருக்கும் தெரியல. இப்பதான் பண்ணோம். Vicky, where did you go? To eat bhaji, huh? Puffo. ಇಲ್ಲ ಪಫು ಇಲ್ಲ, ಅವನಿಲ್ಲ ಅವನ್ ಪಫ್ ತಿಂತಾರೆ, ಇವನ್ ಪುಫು ಮಾಡ್ಕೋದ. ವೆರ್ರಿ ಇದೆ ಲಯನು. You don't smoke, no? Hey, I'm asking about problem, da. Start. Which one? One. How many shares are there? We saw no 800, 2000. No, what I'm saying is you guys try. Whatever you guys can understand, you try. Why I'm telling that is, we do not have these formulas in our book. What institute expects you is to put that theory into practical. After we will see. Now you understood the concepts, right? Keeping that in mind is what they're expecting you to solve this. Again, I'll teach you, right? Now again we did it. The same way we will do it again. Amar, what did you eat there? You thought lot of time. Huh? Then backbenchers, so solve. Sir, what should we do? Just keep looking at me. Hey, it's all the practical. Just now we saw no that Infosys, that related one problem. Try. I don't know. This is a complete question. Everything is there now. Net payout ratio. Where? Meaning at the end of the day, how much he gains or how much he loses. Net is always, you have to take both. Something and all they have given, no? Huh. No, that you should not assume. That you leave. That premium part, that I showed it to you in real life. They are not telling you that part. Premium they have given you, no, here. 30 rupees, 5 rupees. First of all, tell me whether you guys are getting it. You're getting something, right? Try. Simply don't do that build up. Oh shit. Your racing might have also your time also. Yes, Lakshana.
The first one is at
3,500 for the first one, is it? That's a loss. Okay. You also got the same thing, Matthew? Very nice. Pooja? Yet to see ya. In message, notification on. Where's your friend Pooja? She left her. She okay. 2,500. Other options. Come on. Loss or profit?
Loss.
Okay. Jayanant? Wait, sir, coming. Wait, sir. Samo? Gokul? 3,500. Okay. Online. What is that? I can feel it. Even I'm what and all they have given. Correct? No, same feeling, no? Huh? Okay, we'll see what is that.
Premium will also follow.
Second at 47.
40?
7,500.
47,500 is what? Profit loss.
So lost in the final payout they will pay.
The final payout is 47,500. It's like a loss.
Yes.
Kanishkar, what? A Gobi or what? Chikmagaluru? Yeah, ಅಲ್ಲೇ ಇದ್ ಬಿಡ್ಬೇಕಾಯ್ತು ಇನ್ನೊಂದು half an hour they only would have come. Done. Okay, 47,500 is the net payout. That is what you're saying. Okay. Now people, okay, now concentrate. Now whenever options are asked people, now how is that you calculate? Now see here. First thing people write down data in this manner. How is that? The first one people write down the option. I will write this table in the exam. Write down first thing is as option. The next thing is people, what is the premium? Next one is people, what is the quantity? What is the quantity? Next one people, what is the strike price? I'll explain you everything, don't hurry. One is strike price. Next one is people, market price. Next one people, result. Next one people, profit or loss. Hello? Write down all this. Your life becomes easier. Now my first one, what have they given people? They have given the result of assembly election. Okay, valla beda namge. Kamal, one of his friends is regular. Kamal advised him to take position in following option contracts in PQR Limited, assuming the option lot size is 100. You remember that Infosys we saw. We can't trade in one share, two shares. You have to take some minimum shares. That is what they are giving you here as minimum quantity is 100. Is this clear? All of you? Okay. Now what are they telling you? This person has advised him to purchase one lot with 1 month call option with a premium of 30 with an exercise price of 550. What do you mean by exercise price? Today we have decided after 1 month we will buy this particular share for 550 rupees. Today we have agreed after 1 month we will buy the shares of this company for 550 rupees. Remember, exercise price, strike price means the same. What do you mean by exercise price, strike price? It is nothing but predetermined price. What is the price we agreed today? After 1 month, we agreed, right? We saw in Infosys, right? 1920, 1650, 1600. What is that? Today we are agreeing. That is only called as predetermined price. Also you will call it as strike price. Also you will call it as exercise price. Now write down all that information here. What is it they're telling you? You purchased one lot with a premium of 30, exercise price of 550. Write down everything. How much is premium? The first one, what type of option it is? Call option, no. I will write call option. How much is premium? 30. What is quantity? 100. What is strike price? 550. Write down all the details. It will become easy for you in the exam because the data will be right in front of your eyes. Presentation wise also, it will look good. Agreed? Yes? Okay. Now go back. What else data they have given? They are saying that, where is that? Where did we leave? Next one. Purchase one lot with one put option with a premium of 5 rupees with an exercise price of 450. Now next one is people, one put option, correct? Hello? Premium of 5 rupees, quantity is again 100, strike price of 450. Agreed? For both, what is the market price? 500. They have given you two scenarios. Can you see that? If the price of PQR Limited share happens to be, they are telling you two scenarios. Imagine there is no change in price. Imagine the price of the share will fall to 350. Now what I have to do, people? I have to do this 2 times. They have given me 2 scenarios. For call option 2 scenarios, put option 2 scenarios. So now what I will do? 1, 2. Again 30, 100, 550. Now people, market price, what are they telling you? In the first one, people, in the market price, what is happening? One is there is no change in price. Next one is it is falling to 350. What is the price? If there is no change in price, what will happen? The market price is 500 only. In the second scenario, they are telling you, assume what will you do? Instead of 500, if the market price is falling to 350. Now I got my data. Now I have not even used my brain. That theory question I just presented in a table form. Till now all of you are understood. And now let us put our knowledge into use. What is that? Now try to think. I have entered into a contract to buy the shares of a company at 550 rupees per share. In the market it is available for 500. With you I need to buy it for 550 rupees. What will I do? Will I exercise the option or will I let the option lapse? Again I repeat, if at all I have agreed with you to buy it for 550 rupees. If I go in the market, same share, I will get it for 500. But with you, I need to buy it for 550 because there is a contract. Now what will I do? Will I say yes to your contract? No to your contract. I'll say no. For no, what will we write in our exam? I will let the option lapse. Hello. Now you tell me what is the profit or loss I made. What is a profit or loss? Now people, I did not exercise the contract, so it is gone. So what is the profit or loss I made? The maximum loss I made, people, 100 rupees into the premium made. Nothing but people token advance. So what is the loss, people? The premium paid into the quantity. 300, 30 into 100, that is nothing but, people, 3000 is the net loss. Online. I hope this is clear. All of you. It's clear? Making sense? Okay. Now you guys use your brain and tell me, what will you do? What will you do? Labs? Labs, Labs, Call, no. Second scenario. Oh, sorry. Call only 2 scenarios, put only 2 scenarios. Sorry. My mistake. What will we do? Labs, why? Again, I'm telling you, I have agreed in the contract to buy it for 550 rupees. Macha, in the market it is available for 350 ano. Now will I buy it with him or will I buy it in the market? I'll buy it in the market. What will happen to the result? Exercise the labs. Now tell me, what is the net loss? Again? Correct? Agreed? Now write down scenario number 2. What is scenario number 2? Put option. What is the premium paid? 5 rupees. Net quantity is 100. What is the strike price? 450. Okay. Strike price is 450. Market price? 500. That is, there is no change. What will happen to the result?
Exercise.
You will exercise? How many of you think you will exercise? How many of you think you will lapse? Okay, how many of you exercise? Why exercise?
So the buy it at 450, just less than 500. You will not lapse.
So you will exercise it, is what you are saying. Okay. Gokul, why? One minute. Saket, why? Oh, reason ಕೇಳಿದ್ರೆ ಬೇರೆ answer.
Because 500 is market, I can sell it for profit.
Logically think, people, I have agreed to sell it. Strike price means what? Agreed price. I have agreed with you, I will sell it to you for 450 rupees. I have agreed to sell it with you for 450 rupees. In the market, I can sell it for 500. Will I sell it to you or in the market? Then what will I do with your contract? I will let it lapse. Because market price is higher. So you see from the seller's point of view, no, because it is. Call, see from buyer's point of view. Put, see it from seller's point of view. Hello. Pakana. This can be the most difficult question that can be asked in the exam, in the options. If you're able to understand the logic, very good. You guys cracked it. Hello. Yes. Now, tell me, lapse. What is the loss? How come? So, what is the maximum loss that can happen? Whatever is the premium paid, that I will not get back. So, maximum loss is 500. Agreed? Second scenario. Put only 500, 450. Price now falls to 350. What will happen? I'll exercise the option. Why? I will exercise the lapse. How many of you think lapse? Lapse. Lapse the put it is. Lapse. Why, Sam? Why lapse? Strike price. In the contract you can sell for 450. In the market you can sell for 350. What price you will sell? So you will exercise or lapse? Yes? So people, as per the contract, I can come and sell it to you for 450. If it is not the contract, in the market I am getting less down, I am getting 350. What will I do? I will exercise. Now tell me, what is the money you make? That's all. I make 500 rupees. Profit, loss, some calculation should be there, no? I make 10,000? 10,000? 9,500? Very good. Remember, what is the money I make, people? What is the difference, people? 450 rupees minus, what is the market price now? So what is the profit I made? 100 rupees per share. How many shares do I have? So what is the total profit I made? But don't you think there was also cost?
Yes.
What is the cost? You paid premium. I told you premium cannot be adjusted. No matlab there. That is gone. So 10,000 minus 500 will be 9,500. 9,500 will be my profit. So if I take it as a net, my net will be what? You cannot add everything because there are two different scenarios. So how I need to take it? If it is scenario 1, my net loss will be 3,500. If it's scenario 2, my profit will be 9,500 from this contract minus 3,000 here. So how much will be my net profit? Clear? Sir, why did I not take complete net today? In the question they have given you an assumption of two different scenarios for two different contracts. So this is scenario number 1, scenario number 2 for put and call. Again for call scenario number 2, for put scenario number 2. You have to take only for that. Agreed? Illa? Yes or no? Jayan understood? Pakka? All of you understood? Hello? By the time you guys start talking to me, no, all majority important topics will go off. Better you talk early. Understood? Illa? Yes sir. All of you understood? Mark it important. If possible, click a picture. You have to write in your exam, call and put in the same way. Xerox copy it has to be there. So in your book, in that some place, make it in your own style, have a proper handwriting. So how will I write? Conclusion, scenario number 1. Conclusion, my net loss will be 3,000 of call, 500 of put. Together will be, in scenario 1. In scenario 2, 9,500 profit, 3,000 loss. It will be net gain. Loss is always shown in brackets. Clear? All of you? Pakka? All of you clear?
Yes, sir.
Okay. Today we will do one thing. I'll give you an assignment also. Solve it and come. No ChatGPT. Okay. People, if you want, click a picture or something. Solve this as an assignment tomorrow and come. Tomorrow we'll see the solution for this. If anyone online, if you guys can crop a good picture, please post it in the group as an assignment. Mandatory, anyone who doesn't solve, please don't come. What if in first scenario one assumption is exercise and one is lapse? Which amount we take? I didn't get you, Puneet. In first scenario, one assumption is exercise and one is lapse. How can that happen? It can be either exercise or lapse, right? Okay, let us do one thing. Sir, could you explain the amount 9,500 for put option? How did I get 9,500? See, now I exercise the put option. What do I mean by that? In the market, the share prices are sold at 350 rupees. But what price did I sell? I sold it for 450 rupees. In the market, it is 350. Outside, it is 450. Then what is the net profit I made? I made 100 rupees per share as net profit, right? I sold at higher price. The current price is 350. I sold it at 450. So per share I made 100. How many share we totally have? 100. So 100 into 100, 10,000 rupees. Minus, what is the premium we have paid? 100 into 5. That's the cost. So 10,000 minus 500. That's the net profit I made. That is 9,500. Is this clear? Veda? Okay, there's one thing, you just do it now. Next, we'll go to the next concept. The last thing. Again, call and put if you guys get it right. Simplest one. I don't think there is calculations, but yes, try it. Done? This is easy. Why? Because the last one says something. Then no calculation also. Meaning they are making your life so easy here. Gokul? 1 minute. Gokul is 1 minute fellow. Confused. Now understood? Anna, tell me. Okay, let us read together. Tarun purchases the following European call option. What do you mean by European? So you can only exercise the option on the date of maturity. He has purchased following call options of TCS. He also purchased the following put option of ACCA. What decision he would take on expiry if TCS closes at 835 and ACEC closes at 565 spot prices? Ignore the premium paid. Now what are they telling you? He has purchased TCS call option at 8:30. The spot price is people 8:35. What will he do? Will he exercise the option or will he let the option lapse? Exercise. Why? Simple. In the market, I'll have to buy it for 835 rupees. But in the contract, I can buy it for 830 rupees. So they have not even asked you calculation or net profit, nothing. What are they? What will you do? What I will say? I will say yes or a no. Agreed? So in this, what will I do? 835 rupees is the market price. But in this, the price is how much? 830. So what will I do? Lapse or exercise? I will exercise the option. So what is the profit you would have made? They have not given you anything, quantity or anything. But I would have made 5 rupees profit. Correct? Yes, sir. Next one. ACC put. Put means what? Seller. I have agreed in the contract to sell it for 510 rupees in the contract. But now what is the price? 565. Will I sell it in the contract for 510? Will I sell it in the market for 565? Now what will I do to this contract? Lapse. What will be the loss?
So no, it's not.
What is the loss? Now put one Rajmouli stamp and remember the concept I am telling. You will never calculate the net loss if at all, net profit or loss, if at all you have let the option lapse. What do I mean by that? When I exercise the option, I did 835 minus 830, we made 5 rupees because we exercised. If the answer is lapse, don't do 565 minus 510. Don't do that. You have let the option lapse. That means you have never done it. Then how will you make profit or loss? Then what will be your loss? The maximum loss is your premium paid. So what will be my answer here? I will write the answer is lapse. And the loss is yes, sir. If you still want to remember better, wherever we wrote the notes of options, write down there if you want. Note. Do not do the calculation of profit or loss. Write down the note there. Wherever we wrote that options, write it down there. Do not do the calculations of. Do not do the calculation of profit or loss if the option is lapsed. Yes, sir. And if you have space, write down. If the option is lapsed, if the option is lapsed, if the option is lapsed, brackets write down, put or call, applies to both. If the option is lapsed, bracket put or call, the only loss incurred, will be premium paid. That's all. So you will calculate profit or loss only when you exercise. Now again think, when I have exercised, how will I calculate? I will take the difference between the market price, strike price. I will get one value. In that, deduct your premium paid. Understood? Hello? All of you? Okay. Next one, TCS 840 call. You will exercise a lapsa. Lapsa, why? In the market, I am getting at 835. In the contract, I am getting at 840. So what will I do? What is my loss? Agreed, huh? What is the last one? ACS 520 put. Will I exercise or lapse? Why? In the market, I can sell it at 565. In the contract, I can sell it at 520. So what will I do? What will be my loss? Now remember, there will be never a pattern. If scenario 1 is exercise, scenario 2 will be lost. That will never come. If you observed in the previous scenario also, it was lapse, exercise. That is just to play with your mindset. Few people will think one is lapse means one will exercise. There will be no scope of such a fluke. Yes, sir. Hello. Huh.
In the first case, strike price is 830 and the market price is 835.
Correct.
In this case, if there was a premium of 10 rupees, then it would be lapse.
Okay, what is your name?
Yes.
Yash gave me a beautiful question. Let us do this. Yash is telling in the first scenario, the market price is 835, the contract price is 830. Sir, what if we have paid a premium of 10 rupees? What will we do? What will you guys do? Exercise or lapse? Exercise or lapse? Exercise, huh? First only, let us only see from first. Market price is 835. Contract price is 830. I have paid also premium of 10 rupees. What will you do? Exercise or lapse? Exercise, huh? Pakka na? Yes, what do you think? Why?
Because sir, then if we include the premium, then the strike price will become, the total aggregate will become 845 and this market will be 835. So I will buy something which is cheaper, say 35, not 845.
Okay, I'll answer you. Anyone else who says lapse? Lapse? No one. Exercise lapse. Lapse. I think lapse. 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 Why lapse?
If I get it to the agreement, I have to pay 83,000. For example, I took the minimum shares to be bought as 100. So then I have to pay 83,000 in the agreement. In the market, I have to pay 83,500. The premium I have paid is 1,000. So the profit that I make is only 500, but the premium paid is 1,000. So there will be a loss, right? If I go by that.
Okay. Anyone else lapse? Okay. Now my question to both of you. Whether you exercise or you don't exercise, don't you think your premium is a cost only? So even if you have let your option lapse, your 10 rupees premium you have to pay from your pocket. Now in your chance, what you guys are doing? You are letting the option lapse. 10 rupees also gone. And you are going and buying in the market again by paying the same price, more price. In fact, you are paying more. Because I told you, premium is non-refundable whether you exercise or you don't exercise. Agreed? Yes? Yes? Now I'll ask you the actual question. The market price is 830, the strike price is 830. What will you do? What will you do? Remember, in exam also you will be writing the same thing. It's anything. Because there is no answer for this. Whether you lapse also. Imagine I let the option lapse. My premium is gone. I'll have to buy outside also for 830. If I exercise, anyways premium is gone. I again have to pay 830. There is no answer for this. So I will just write at the option of the option holder. If he wants, he will buy. If he not, he will lapse. There is no answer for it. So what I will write? At the option of the holder, he can either lapse or exercise because the net effect is same. Make sense? All of you? That's what I'm saying. You exercise also loss only, no? Lapse also loss only. What difference will it make? Correct only, no? Hello? People, I hope all of us now are on the same level. If you guys didn't understand also, please feel free to ask. Clear? Pakka na? Taka taka right of next concept. That's all. That is option. Simple. See? Children. I told you it is children. Don't you think it was children? Yes or no? That's all. Huh? Jagan wants more. Trust me, you will love first 2 chapters. After that, last, I will only, last. Concepts are so good to teach. You're learning, don't you think so? That's what is learning is. And trust me, if questions come 5 marks pakka. In theory, how difficult it is to impress to get 5 marks. Practical, hey, labs, exercise, labs, got now 5 marks. Huh? What, Kanishkar? Just like you order board there. Easy it is. Okay, right on next one. Warrant. Taka taka right after. Today we should have completed this chapter and gone to the second chapter. Tomorrow also we'll be in this chapter only. Ayyo, we are going slow. Hey, Macha, you guys have to respond quickly, da. Yes, sir. Hey, he is hypnotizing me because of Vicky. Sorry, da. No, Anna, Gajala. Warrant. Okay. Okay, right on. Warrants, I'll be writing 5. It is an option issued I'll tell you. People, CMSL should be your, mark my words, you have to get exemption in CMSL. If you want to be at ease, meaning life ali stress वेंडा, हमको प्रेशर नहीं वेंडा, हमको कुछ भी नहीं वेंडा, तो CMSL you guys have to score 60. Sir, easy or difficult? Now only you know it's easy. Easy da. See people, I can do 2 things da. Solve the most easiest question and make you suffer in the exam. Now you guys have solved the most difficult question. Now I have given you an assignment. Now don't you think so? Always remember people, you are learning. I did not even know probably 1% of what you guys understood now in this age. Not even 1%. You are learning good only. And second thing, always remember, a student fears when he goes through a difficult concept. My thing is, yes, that's why you are in the class. You guys have to understand, yes, it takes time. The only thing where you guys have to ask yourself twice, did you understand it or not? The concept can be difficult. Yes, it is difficult. The only thing you analyze, did you understand? No. I am telling, come and ask me. Oh no, so I will keep it within me only. Then what do I do? What else you want me to do? Tie one friendship band and tell Macha, please feel me as a friend. Vicky Garu. Ask. Yes, and feel free to ask in class, because outside it will be only your doubt, selfish. Here, probably what if someone like you is also having that doubt, who will never open up. Agreed? So what if there is one online person? What if they have that doubt? Ask, it's okay. See, Yash, that was a good question. What would you have done if that question comes in the exam? Of course, that example scenario is there, that scenario. But I'm telling, what if that scenario comes? What will you do? More you ask, more you learn. Their meditation class, they sent me saying CMSL class, they cheated me. They literally cheated me. I have never been cheated in my life like this. When will you speak, da? Right. It is an option issued by company where buyer has right to the introvert 10 ಜನದಲ್ಲಿ ಒನ್ ಇರ್ತಾರೆ ಕ್ಲಾಸ್ ಇಂಟ್ರೋವರ್ಟ್ ಹೌದಾ ವಾಟ್ ಯಶ್ ಐ ಆಮ್ ನಾಟ್ ಇಂಟ್ರೋವರ್ಟ್ it is an option issued by company where buyer has right to purchase a security at a given exercise price at a given exercise price during given period. During given period. It gives a right but not obligation. The tenure of warrants shall not exceed 18 months from date of allotment. From date of allotment in IPO. How many did I say? I'll write 4 or 5. The price is to be disclosed in offer document minimum 25% of consideration is to be received upfront. Is to be received upfront. Is to be received upfront. The option has to be exercised within 3 months from date of payment of consideration. The 5th point I'm writing here only. A security may have one or more warrants attached to it a security may have one or more warrants attached to it. Able to see? Copy down. Now next concept is called warrant. Simple thing. What is that? You have something called as options and all. Now options is something which is traded amongst us. Now what do I mean by warrants? Warrants is not that popular in India, but for the purpose of exam, what is it? Try to understand. Now let us imagine a company is coming up with something called as debentures. A company is issuing debentures. As a token of gratitude that you have purchased debentures, what will a company do? Company also will give you an option to buy equity also in the future date. How will they give you an option? They will give you something called as warrant. Sir, now what do I mean by that? Now for example, people, I'll tell you. Now imagine I go and buy something in, there is this place called Brand Factory. Have you guys been there?
Yes, sir.
Yeah. Now how does Brand Factory work? Now imagine I go and buy some merchandise now, some goods now. Brand Factory will give me something called as coupons. So for example, if I buy something worth 10,000 rupees, they'll give me coupons of 5,000 rupees. I said, hey, then you gave no, take 5,000, reduce, illa sir. Next time, now Allah. That coupon is valid for next time. It is just our loyalty to you, sir. Agreed, huh? Same thing, people. When I purchase debenture from that company, as a loyalty, what they're giving me a coupon. That coupon is called as people warranty. Now you tell me, can I take that coupon, go to Samadhi and come back in next gen and go and redeem? No. Then I have to redeem it. No. They'll give me some time period only, right? Now when is that time period? There'll be some 1 month, 15 days, whatever is the time period. Now within that I have to go and buy back some other goods. Cut, copy, paste. This warrant is valid for a period of 18 months. Now within this 18 months, what will I get, sir? There you said you can go and buy some goods. Here you will get an option to buy equity of the company. Like ESOP, yes. You don't get confused, leave it. So, why I'll tell you, I say yes, you guys will start thinking in some other channel. Wait, nah. You think in my thing only, somewhere you'll be there only. Now people, what did I say? Now I got the warrant. What is the warrant for? Today they say, sir, you have purchased 10 debentures. No, here I'm giving you 10 coupons. In the future date, you will have an option to buy 10 equity shares of the company. Just that, sir, you should also show your interest. How? So the equity shares, the price of the equity shares, we are selling it at 100 rupees. What you need to do is, you have to pay 25% now. 75% you pay later, it's okay. But 25% you have to pay now, that coupon. You have to pay 25% now. So, debentures I paid, plus if I want the warrants, I can pay 100 rupees is the share of Infosys. I mean, that equity share, I need to pay 25 rupees per share. If I got 10 warrants, I will be paying 25 into 10. How much? 250 rupees. I will get 10 coupons. That is 10 warrants. This 10 warrants, I will have it. The validity period is 18 months. What do I mean by 18 months? The company, within the next 18 months, you have to ask for the full payment. If you don't ask, or if he is not paying, the options will lapse. The warrant will lapse. Meaning, I got the coupon. I did not go and purchase. Some fine day, one fine day, I go and take it to the coupon, to the shop. What will they say, sir? This is expired. Same thing will happen here. The coupon will expire. Hello? Understood? Which one? From Samadhi? This one. Okay. Now people remember, what did I say? Now I got the coupon. At the time of taking the coupon, they will collect 25% of the price from me. Only 25%. Rest of the 75% is not yet taken. It is yet to be taken. Now, what is your name? Serena is asking, sir, instead of now giving 25, later giving 75, end of the day I have to give 100%. Yes, you have to give 100%. You have to give 100%. Now Bhargav is saying, sir, if I give 100%, then what coupon are you giving me? Bhargav, you know what is the coupon? The share price when I issued it to you is 100. I have 18 months time. Let us take after 1 year. The share price might have gone from 100 to 200. Chances there are. But how much will you pay? I will still pay the remaining 75 rupees only. 25% is paid upfront. So this is how the company shows the loyalty to you for buying the debenture. Understood? So now when should I pay? The company will give you a call. Say for example in the 10th month, in the 11th month, they will say, sir, now you have to take your choice. That is, do you want the equity or you don't want the equity? From the day the company calls you, you will have 3 months to decide. If you want, pay 75%, take equity. If you don't want, the 25% is the bet. You lose it. Again, I repeat, you would have paid that initial 25%. No, that you will lose it if you don't exercise it. You tell me, why will I not exercise? After 10 months, if the share price instead of 200, what if it goes to 50? What if it goes to 50? Am I an idiot or what? To pay another 75 rupees and take a 50 rupees worth share. I will say, it's okay, I don't want your share, you only keep it. I will lapse it. Similar to your option, but what is the difference? This is given to you by the company itself, not a stock exchange or some trader. It is directly with the company. Sure, this concept only is called as warrant. Warrant gives you an option, not an obligation. Upfront pay 25%, 75% pay later. Warrants are valid for 18 months, but remember, from the day the call is made, you have to pay the warrant money, remaining money within 3 months. If not paid people, then the warrants will lapse. Sir, what is the share price falls? Tulasi, Veda, did I answer your question? Tulasi, Veda, did I answer your question? Veda? Veda, so the answer is simple. The total share price when the issue was 100 rupees. 25 rupees will be collected upfront. The rest of the 75% of the initial price, not the market price. Later and all, it can be some amount. Whatever is the initial amount, 100 rupees, in that 75% will be collected later. Imagine 10 months later. Yeah, if at all on that day, if you think the share price have gone up, pay 75 rupees, get the share. If you think share price have gone down, then don't pay 75 rupees. But the 25 rupees is a loss for you. So this concept is called as warrant. Is this clear? Hello? Online? Here, Anna? Tell me, what is the problem?
We got confused
With which concept?
So you're telling that first the should pay 25% to secure a warrant.
So, okay, people, 1 second. Within 1 minute, I'll explain it off. 1 second, see. Do not get confused between options and futures. It is done. Don't correlate. There is a company called as Infosys. Infosys is selling you debentures. What is the value of debentures? One debenture is worth 1,000 rupees. Here I have to pay the entire 1,000. In debentures, I am not getting any discount. As a loyalty, what debentures may do, what Infosys can do, they can attach with debenture. For one debenture, they may attach 1 warrant or 2 warrant or 3 warrants at the option of the company. Now let us imagine with every debenture they have attached one warrant. That means what? I pay 1000 rupees, that is one debenture, I will get one warrant. What if I purchased it 10 debentures? I paid 10,000. How many warrants will I get? I also get 10 warrants. Is this clear? Now, while you are taking, I will ask you, do you want warrant? I'll ask you, do you want? Do you want? You want? Now I'll say, you have to take a bet. What is that? Now this warrant will give you an option to later convert it into equity share. Okay, you said okay. What is the price? Today price is 100 rupees per equity share. So the company will say, Lakshana, you will have to pay 25% now if you want to participate in this program. Lakshana will say, yes, I am interested. I want to take that bet. Lakshana will pay 25 into 10 warrants, 250 rupees upfront. Now 10 months down the lane. Now Infosys will call, Lakshana, we have decided, this is the month you have to decide whether you want to convert the warrant into equity share or not. Now what will Lakshana do? Lakshana will open National Stock Exchange website. She will see what is the value of that Infosys share now in the market. In the market it is being traded at say for example 300 rupees. In the market today. But with them, you have entered into a contract that I'll buy it for 100. I've given 25% already. Now I'll come and say, yes, I want your share 75 rupees per share I will pay, remaining 10, 750 rupees I will pay. I'll convert the 10 warrants into 10 equity shares. The company has to do this entire thing within 18 months. Now, they made you a call. Lakshana, tell me whether you want it or not. You will have 3 months to pay the consideration. Now, if you do not pay 75 rupees within 3 months, whatever the 25 rupees you paid will be taken as a cost towards warrant. You will not get it back. It will be forfeited. It's a loss only for you. Debenture, that's why I said this and all is not at all related. Debenture is separate. Oh, alag, ye alag. Hello. Now tell Veda, Ritika, Vasudha, Lakshmi, Gayatri. Understood, huh? Hey, too much complicated, huh? All of you, online. I'm doing all the easiest concepts first.
Sir, is the equity share come under primary market or secondary?
Primary. Warrant only, no IPO. Primary. Online. I think this is clear. Girls. Yes. Okay. Thank you so much. Bye bye.